Namaste, good morning. Well, what's this revision classes going to do for us in a very brief manner? I like to tell you what we are going to do in revision sessions. I'm picking up 50 questions and answering. Taking some RTPs, MTPs also, ensuring that we do the RTPs and MTPs also. And some own questions, some past questions with some adjustments, etc. So, plan is to answer 50 questions. And it's going to be a wild hit that we should get 80% of the questions from here. It's going to be really, after a lot of thinking and other things, I have come out with materials. So 5 days, 10 questions a day. That's how I'm not exactly telling you it's going to be 10 questions a day. I'm just telling you that I'm planning to do all these things. Okay. So just want to tell, sometimes I feel that there is an unfair hue cry that this is voluminous, etc. At the end of the day, it all boils down to some 20 questions, 25 questions. Okay, so want to try that. The intention is when you complete your optional paper and come home and you have some 30 hours of time, you should be able to do this 50 questions. That's the intention by which we are trying to cover the maximum. Okay, let's try. It's going to be a wild hit, and sometimes I believe that it will click. Okay, and if it clicks, we are going to have a real wonderful time. Okay, but I will tell you something, that I am covering maximum in this. Though I am saying 50 questions, some questions has 15 parts. First question itself will have a lot of adjustments. So I am trying to cover the maximum without, I know how precious is your time. So I am not going to ask you even one question. Be sure about it. I am not going to ask you even one question so that you feel slightly jittery and all. No. I have prepared this material or started in the process of preparing this material with one intention. Even if a student with just the basic knowledge of taxes comes to the classes, attends this revision, goes back, he is able to clear. Those who are coming with a 1 or 2 times a revision are attending this revision classes, they should get exemption, or they should go ahead and get that. So with lot of hopes only I have prepared. So no questions from me to you. All questions from you to me, we will reserve it at particular time frame so that we don't disturb the classroom output. And I didn't find time to record that amendment lecture which I lost, and because of that, so I am including all the amendments again here. I'm going to do the amendments. So if you find it useful, it will be open YouTube videos. You can share it with your friends or anybody. Okay, I'll post the link from today. Okay, which I uploaded daily itself. Right, friends, let's start. The first part of the revision classes, how it is going to go on. PGBP, capital gains alone, standalone, I'm going to do. PGBP will be clubbed with assessment of firm, companies, cooperative societies, individuals, everywhere. Charitable trust, I'm going to do it because we are going to hit that 8 marks. TDS, TCS, I'm going to do it as a standalone chapter because we are planning to hit that 8 marks. And then we will go to the last part of assessment procedures. Updated return and all the other 148 amendments, we will look at it. Then we will mark the last 2 days for international taxation, where 15 questions from international taxations. I'm just planning. All these things are in the planning stage, because once I complete day 1, I know if at all I'm missing out anything on day 1, I will include it in day 2 material. That's why day wise material, but the complete material at the end of the sessions. Okay, right. Do not worry about anything. இதெல்லாம் எனக்கு தெரியலையே நினைக்காதீங்க, இப்ப தெரிஞ்சுக்கலாம். Okay, if you know these things, feel happy that it's something I know. If you don't do, if you don't recollect that provision, if you have forgotten that provision, if you have not read that provision, trust me, we are doing. It's going to be a magic. It will work. I always believe in miracles. எனக்கு இதுவரைக்கும் நான் CA ஆனதே அதனால்தான். So I believe that it will be the same for us. Question number 1, purely provisions related question. Brother Laboratories Limited, a company engaged in the business of manufacturing and selling pharmaceutical products, provides the following details. Whenever you see the word manufacturing, you try to remember there is something known as additional depreciation. There is something known as skill development that they are eligible to claim. Okay. The turnover of the company for the past 3 years, 1920, 2021 is more than 400 crores. So their normal rates of taxation is going to be 30%. It is the turnover of 2021 which is important. Even though 21-22 is lesser, 2021 is the one which is important. Net profit as per profit and loss account after debiting or crediting the following items: 36 crores, 45 lakh, 56,700. The credits are compensation received for delay in supply of raw materials by suppliers is part of a business income. All compensation other than compensation for assets is part of business income. If it is for asset, it will go to reduce the cost of the asset. Otherwise, all compensations are part of business income. Subsidy received from government for COVID vaccination project, 2 crores 60 lakhs, including 36 lakhs, that is 10% of cost of machinery to manufacture the vaccination. So this particular subsidy alone should go to reduce the cost of the asset. Subsidy, if it is general subsidy, it is an income. If it is subsidy for a non-depreciable asset, which is land, it is an income. All subsidy towards depreciable asset will be going to reduce the cost of the asset. This is as per ICDS. This is as per ICDS. Profit as per books of account of old machine which is acquired for the purpose of research. Purchase price, book value, sale value. But as per income tax law, they would have claimed the entire 42 lakhs. If it is purchased for the purpose of research, they would have claimed the 100% as expenditure. Whatever is the sale proceeds received by me is now should be treated as income. Sale of asset used for the purpose of research, because the research expenditure is allowed as deduction. Sale value will be treated as income. Bad debts recovered, claimed is 7 lakh, allowed by assessing officer is 5 lakh, 3 lakh is now recovered. I'll tell you how to work out. Write back of loan provided by the company. Loan which is acquired, which is obtained for acquiring machinery, it should go to reduce the cost of the machinery. It is not a trading liability. Only a trading liability, if it is returned back, if it is waived, it will be treated as income. A non-trading liability, nothing happens. Loan, it goes to reduce the cost of the asset. Machine value has reduced. Loan which is obtained for working capital is an income. Interest on such loan, neutral effect. Neutral effect. Debit, depreciation as per book. Contribution to Scientific Research Association in May. However, it is to understand that approval of the said institution is withdrawn in December. That doesn't change the picture. You can still claim it as a deduction. At the time of contribution, you had it. Donation to PM cares, only 80 GG. B can be claimed, it's a company. The company implemented a VRS with the approval of authorities. 7 employees opted for the scheme and the company has made a settlement of 10 lakhs per employee. 1/5 is only allowed. 1/5 is only allowed. Remaining 4/5 will not be allowed. Contribution by the company in the capacity of the employer to the following funds. Pension fund, only 10% will be allowed. Only 10% will be allowed. Pension fund contribution under section 36 is restricted to 10%. Provident fund allowed. Superannuation fund allowed. From the information available to you, you further understand that March month contribution of PF of employer and employee up to amounting to 12 lakhs is paid only during May. Okay, this is the issue. Employees' contribution has to be paid within the due date of the respective law. So which is nothing but 15th of the subsequent month. This has been paid in May. So employer fine according to the due date as per income tax law 139(1). But employees contribution of 12 lakhs should be treated as income. Employees contribution of 12 lakhs should be treated as income. Freebies provided to hospital, which has been very supportive to the implementation of COVID vaccination, not allowed as deduction. The amended provisions of 37 along with the circular says any freebies provided to medical practitioners, to hospitals, which is against the medical council, ethics of the medical council, will not be allowed. This will not be allowed. This will not be allowed. Free samples provided to medical practitioners. Both these things will not be allowed. Remember, idukku for 194R and they are liable to take it as income. Even though it is not allowed in the hands of the payer, for the receiver, it will be treated as income. Interest expense for purchase of machine whole year paid in November 23. So unfortunately, it is paid after the due date of filing returns. 43B applicable. We will come to that. For loan taken for payment of income tax in order to avoid any interest on loan taken for payment of tax will take the character of income tax itself. It will be disallowed. For debentures issued to non-resident on which tax is omitted to be deducted at source, 100% disallowance. 100% disallowance. For SBI, in lieu of outstanding interest for financial year 22-23 for loan taken towards working capital, the company issued 5% debentures in July 23 towards settlement of outstanding interest. 100% disallowed. Amendment in Finance Act 22, where if you settle an interest, outstanding interest by debentures, by issuing debentures or bonds, it doesn't mean the amount is paid. 43B is clear. Where any statutory due is outstanding as on 31st March, only if it is paid, it will be allowed as deduction. If it is not paid, it will not be allowed as deduction. So 100% disallowance. Additional surcharge and HEC on income tax of 2021 paid during the year as income has increased in the assessment. The company has been regular in claiming this as expenditure, disallowed. Our amendment in section 40 says, because there were various codes interpreting, only income tax is disallowed, surcharge and HEC will be allowed. No, that will also be disallowed. Provision for gratuity made during the year. Actual gratuity. So provision will be added, actual gratuity will be allowed. Paid rupees 40,000 in cash to 4 employees during the year. To employee 1 at the time of retirement, allowed. Up to 50,000 you can pay. Employee 2 was paid due to urgent family requirement, not allowed, disallowed. Employee 3 and 4 due to posting of them for 25 days outside the base location, allowed. 90 days varaikku allowed. Temporary posting because of which they are given benefit, it is allowed. So employee 1 allowed because it is up to 50,000 you can give. Employee 2 fully disallowed. Employee 3 and 4 if they are just posted outside the base location for a temporary period, law defines it as 90 days, in which case you can allow. Dividend received from a foreign company in which it held 30% of shares. Previously there was a section called 115 BBD which was taxing it at 15%. Now that section is not there, it is taxable at normal rates. Of course it is IFOS. Additional information. Supplier to whom running bills were paid agreed for a settlement of 36 lakhs as against 45 lakhs. The company do not propose to declare dividend out of this, hence transferred to capital reserve, wrong. Section 41 says, boss, this should be treated as business income. If the creditors forego their liability, it should be treated as business income. Opening WDV, including a machinery purchased and put to use in November 21, because for this in the year 21-22 only 10% additional depreciation would have been claimed. The balance 10% can be claimed this year. Machinery purchased during the year, purchases include a machine purchased in Jan 22 but put to use only on 1st November 22. Jan 22 put to use. Loan had been taken for this machine and interest is duly charged in P&L. No depreciation was charged in the last year. It was kept as capital work in progress and now transferred to the block. Machinery purchased for approved research program. Machinery purchased and put to use in August 22 due to emergency requirement. 2 lakhs was paid in cash as advance, should not be allowed. Any expenses in excess of 10,000 otherwise than by approved modes. The unapproved modes are 3: cash, bearer check, crossed check. Depreciation for all other assets other than machinery. Okay, so we are required to compute the income and the tax. We are required to compute the income and the tax. Interestingly, now I am coming to interest adjustment for machine whole year 12 lakhs. And this is the machine which they are speaking about here. Okay, a machine purchased in Jan 22, put to use in November 22. So up to the date of putting the asset into use, the interest should be capitalized. Borrowing cost should be capitalized. Beyond that only it can be taken. So whatever is the borrowing cost pertaining to that machine should be added here. Okay, whatever is the borrowing cost pertaining to that machine should be added here, and accordingly the adjustment has to be made. Am I clear to you? Okay. Every adjustment, take it separately and read it. Do not confuse yourself that one adjustment. Every adjustment if you take separately, 70% of the adjustments you will be very much knowing. Okay. So in this question I have covered all the PGBP amendments. Amendments which includes that these pharmaceutical companies cannot pay. Apex Laboratories case law is also there, where revenue has won the case law saying that if it is not allowed, if it is not accepted, then it cannot be given. Okay, it is against the ethical practice. Surcharge and HEC. 43B in the debentures issued. Okay, all these three things have been covered as a part of this question, and generally various other provisions which the lawmakers might ask. Okay, those are also covered. Patiently, let's start doing the answer, but let's do it together. I start with that interest working note, then depreciation working note, then only I'm going to come for the main answer. Okay, but in the examination, those should follow. Okay, ஒரு 1 page 1.5 page விட்டுட்டு those should follow your answer. Am I clear to you? I'll start. Interest on purchase of machine. Interest on purchase of machine 12 lakhs. Interest on purchase of machine for the whole year. Okay, the machine is put to use on November 22, on 1st November 22, according to ICDS. Borrowing cost up to the date of putting the asset into use should be capitalized. Should be capitalized. So 12 lakhs is for 12 months. Okay, April to November, April to October, 7 months. Okay, April to October, 7 months interest. I am going to take it to the revenue account. 7 months interest, I'm going to take it to the capital account. So 12 lakhs is for 12 months into 7. This should be taken to the asset account. This should be forming part of the asset. Okay. Balance interest to be considered as revenue expenses is 5 lakhs. Balance interest to be considered as revenue expenses is 5 lakhs. Balance interest to be considered as revenue expenses. Since this is not paid within the due date of filing returns, that is 31st October, the same cannot be claimed as expenditure. Okay, section 43B. The same cannot be claimed as expenditure. Since this is not paid within the due date of filing returns, which is 31st October, the same cannot be claimed as expenditure. Am I clear to you? Am I clear to you? Okay. Working note for cost of machinery. Working note for cost of machinery. Purchase price of the machinery 60 lakhs. Purchase price of the machinery 60 lakhs. Add borrowing cost. Add borrowing cost 7 lakhs. Add borrowing cost 7 lakhs. Okay. Add borrowing cost 7 lakhs. Less subsidy received. Less subsidy received 36 lakhs. Less subsidy received 36 lakhs. Cost of machine which is put to use in November cost of machine which is put to use in November 31 lakhs. Cost of machine. Okay. I assume that the subsidy is for this machine. If you assume that it is for some opening balance machine, then you should reduce it from the WDV. I have assumed that the subsidy is for this particular machine and I have reduced. Okay. If you think your alternative assumption for it can be for the opening balance, in which case it will be reduced from the in the normal working as a deletion. Computation of depreciation. Opening WDV. Opening WDV. Sorry, there. Okay, yeah. Opening WDV 76 lakh 45,000. Additions put to use for 180 days or more. Put to use for 180 days or more. The question says a machine is put to use in August 22 for 14 lakhs. A machine is put to use in August 22 for 14 lakhs, but 2 lakhs was paid in cash. Okay, 2 lakhs was paid in cash. According to section 32, where any section 43, sorry, where payment on a single day to a particular person exceeds rupees 10,000, the payment is made otherwise than by approved modes, then the whole of such amount will not form part of. Where payment is made in excess of 10,000 on a single day to a particular person otherwise than by approved modes, then the whole of the amount shall not be forming part of cost of acquisition. Will not be forming part of cost of acquisition. So what happens is 14 lakhs minus 2 lakhs. So what happens is 14 lakhs minus 2 lakhs. Okay, only 12 lakhs will form part. Only 12 lakhs will be taken as cost of the asset and not the entire 14 lakhs. No, that is only for expenditure. This is cost of the asset. 43.1 gives us what is the actual cost of the asset in various circumstances. Had it been an expenditure, it is 40A subsection 3. Okay, am I clear to you? Okay, friends. Now, so this mission is for approved research program where I can claim 100% of the deduction. Where I can claim 100% of the deduction. So I should not take it. The other mission which I have the cost. Okay. Put to use for less than 180 days. Okay. We have got the cost as 31 lakhs. We have got the cost as 31 lakhs. Am I clear to you? Okay. Deletions, my dear friends. Here there is an information. Write back of loan provided by the bank, loan which is acquired, loan which is obtained for purchasing machinery. When I write it back, it reduces the cost of the asset. It can be any asset. It might have been purchased 5 years back, 4 years back, but it should be reduced from the block value. This will not be treated as income. Once more, I am repeating, write back of trading liability is an income. What is a trading liability? Working capital loan, sundry creditors written back. These are trading liability. Write back of term loan which is acquired for machine. I have purchased a machine for 1 crore. I got a loan of 60 lakhs from the bank. I only paid 55 lakhs. The last 5 lakh I couldn't pay the bank waived. Now the cost of the machine was not 1 lakh, it is only 95 lakhs. It was not 1 crore, it was only 95 lakhs because I paid only 95 lakhs. That 5 lakh got written off. So I cannot go, the law does not ask us to go back to those years, and the law just says when the bank waives a term loan, ensure that it is reduced from the cost of the machinery. Because when you have got the term loan, machine account debit to bank loan, okay, to term loan. When you are reversing the entry, term loan account debit to machine. As a journal entry, if this is passed in the books, if for income tax purposes, it is simple, reduce it from the cost of the machinery. Okay, deletion, waiver of loan for uptime for purchase of machinery. 11 lakhs. There is no other adjustments as such for the machine block. Okay. Balance available for depreciation. One crore 8,45,000. Depreciation. Normal depreciation is 31 lakhs into 7.5% plus the balance 1 crore 8,45,000 minus 31 lakhs into 15%. Repeating, normal depreciation, this into half the rate plus this minus this into full rate. Normal depreciation 31 lakhs into 7.5% and the balance into 15%. Additional depreciation. Okay, additional depreciation 12 lakhs into 20% plus 31 lakhs into 10% plus, okay, the last year I had purchased a machine in November 21 for 17 lakh 40,000. In the last year, I have purchased a machine for 17 lakh 40,000 in November 21. In the last year, I would have claimed only 10% of additional depreciation. The balance 10% needs to be claimed in the current year. Okay, 17 lakh 40,000 into 10%. Hope my computations are right. Just keep checking. For all other asset put together, 23 lakh 10,000. So total eligible depreciation I can claim is 44 lakh 28,250. 44 lakh. All other assets put together, they have given it as 23 lakh 10,000. Other than machinery, they have given it as 44 lakh 28,250. In examination also, try to find time to write these two notes. For the asset purchased in November 21, only 10% of additional depreciation would have been claimed in 21-22. Balance 10% is claimed in 22-23. For asset purchased in November 22, put to use Am I clear to you? Shall we move on? Shall we move on, friends? Okay. May I? Right. Computation of business income. computation of business income. Let's together do. Okay, please stop if I am fast, if I am anywhere. Otherwise, let's keep together doing. Net profit as per P&L account 3645 56 700 36 crore 45 lakh 56,700. Let's go one by one the adjustment. Please listen. Let's go one by one the adjustment. Compensation received for delay in supply of raw material. No adjustment. It is a business income. But we should write compensation received is considered as deemed income under section 41. Okay. Sorry. Compensation direct income, sorry, considered as income under section 28 only if the compensation is related to the asset. This answer you need not write, but if I tell it no, you will store it in your mind. I'm just telling it for your answer stops with compensation received is a business income. Section 28 says compensation for breach of contract, compensation for change in agency agreement, modification, cancellation, ellame business income da. You need not worry. Okay, you need not write beyond that. But why I am staying now is you will store it somewhere. Okay, only if comma is related to the asset, then it should be reduced from cost of asset. So do not worry, no adjustment here. It is a business income. I don't require an adjustment here. I don't require an adjustment here. Shall I move to the next one? Subsidy. Okay. Subsidy as per ICDS and general provisions shall be treated as income. However, if the subsidy is for a depreciable asset, then such subsidy will be adjusted with the cost of asset. So from here, I am reducing just 36 lakhs. 36 lakhs is not considered as business income. 36 lakhs is not considered as business income. It should only be considered as, okay, it should only be considered as cost of asset, reduction in the cost of the asset, which we already did. So this should not be treated as business income. This should not be treated as business income. Are you all following? Are you all following? Yeah. Okay. Right. Profit on sale of old machine which is acquired for research. Okay. Where an asset is purchased for the purpose of research other than cost of land, the same will be allowed as an expenditure under section 35 according to section 41. When the asset is subsequently sold, it will be treated as business income. When the asset is subsequently sold, it should be treated as business income. Where it is purchased for the purpose of research, 100% of the cost of the asset will be allowed. Where it is subsequently sold, then it will be treated as business income. So in this case, no adjustment. The sale value will be treated. That 42 lakhs would have been claimed as an expenditure in the year of purchase. Whatever is the sale value will be treated as income. Only one exception there is, if the sale value is more than the original cost, that excess alone is taxable in capital gains. That is the only thing which is rare case scenario, where you will purchase, you will sell an asset other than land, you will sell an asset more than the original cost. Rare case scenario, but law has that. Otherwise, if there is sale of asset purchased for scientific research, specified business, எல்லாமே business income தான் section 41ல. Because section 41 says, if you have claimed an expenditure now recovered, it will be treated as business income. Am I clear to you all? Am I clear to you? Okay, next. Bad debts recovered. Okay, bad debts recovered. My dear friends, the bad debts that I claimed is 7 lakhs. The bad debts that is allowed by assessing officer is 5 lakhs. Which means 2 lakhs of bad debts the assessing officer did not allow me. The assessing officer did not allow me. Now I am recovering 3, okay. Bad debts recovered is 3 lakhs. What I will tell the assessing officer is, this 2 lakhs which you did not allow, which is there in my books as debt still, I claimed it. I claimed the 7 lakhs. You only allowed me at bad debts of 5 lakhs. So 2 lakhs is still there as debt in my books. That only I recovered, and the remaining 1 lakh is only what you have allowed I recover. Okay. At the time of allowing, assessing officer has the upper hand. At the time of recovery, assessee has the upper hand. Assessee will say, though I recovered 3 lakhs, 2 lakhs is for asset, is the bad debts which you have not allowed. 1 lakh is only for whatever you allowed, I have recovered. So what happens here is, okay, bad debts recovered. The unallowed portion of recovery will not be treated as income. Proportionate concept kadayadu. Direct concept. Okay. The unallowed portion of recovery will not be treated. Assessee claimed 7 lakhs, got allowed only 5 lakhs. Hence, the first 2 lakhs of recovery will not be considered as bad debts recovered. Only 1 lakh will be treated as income. So I reduce 2 lakhs. I reduce 2 lakhs. I am reducing 2 lakhs. It will not be considered as income. Is the class clear? Is the class clear? Shall I keep moving on? Okay. Even if you are writing a shorter answer in the classroom, okay, ensure that you are very clear. In the examination, state the obvious. Okay. Don't expect the examiner to know. Treat him that he is illiterate. Okay. Teach him tax by your answer. Okay. You will have sufficient time to complete your tax paper. Don't worry. Okay. Write back of loan provided by the bank. Okay. Write back of loan taken for purchase of machine. Taken for purchase of machine. Okay. This will be adjusted with the block of asset, and hence it will not be treated as income. This will not be treated as income. 11 lakhs. Write back of trading liability is an income under section 41. Okay. Okay. Now I want you again to understand this, though these are all concepts which you will be clear. One time understanding or recollection will help you to look into it in a better. Okay. Interest. This would have been allowed as a deduction only if it has been paid as within the due date. This interest would have been allowed as a deduction only if it has been paid within the due date of filing returns in those years. So, it has not been paid. When it is waived means it has not been paid. In those years itself, I would not have allowed it as a deduction. I would have disallowed. Now the waiver is not an income at all. Repeating, an expenditure which is allowed earlier, now recovered is an income. An expenditure which was not at all allowed earlier, because interest as per 43B, suppose interest of 2021, October 21 kulla pay பண்ணிருக்கணும். அப்பதான் in 2021 I would have allowed it as deduction. 21-22, it should have been paid before October. Then only I would have. So I have disallowed in those respective years. I have disallowed in those respective years. Now it will not be. The waiver will not be treated as income. The waiver will not be. That's why I say it's neutral. It cannot be treated as income. Neither it is an expenditure which has been claimed. Okay. Waiver of interest. This interest would have been disallowed under 43B in the year in which it was claimed, as it is not paid within the due date. May I? May I, my dear friends? May I? Debits, depreciation, let us add back. One crore 16 lakhs. Contribution to Scientific Research Association in May 22, 100% allowed. Okay, even though the approval is withdrawn later. At the time of contribution, the entity is an approved entity. It has been clarified that subsequent withdrawal will not change the claim of expenditure. So it is allowed, nothing to disallow. Am I clear? There is nothing to disallow. It is allowed. Donation to PM cares. Section 80G can be claimed 70 lakhs. VRS compensation paid. I will disallow the entire amount and allow 1/5. The alternative is you can disallow 4/5. Okay. Okay. 1/5 of VRS compensation allowed as per section 35 DDA. The compensation should be claimed in 5 equal installments. Tap it. Am I clear? Am I clear to you? Okay. Okay. One-fifth. 5 equal installment means from the year of incurrence, claim it for 5 years. Okay. 14 lakhs a year. Okay. In which case, to just recollect somewhere else, suppose if this entity is converted into LLP. So the balance will be claimed by the LLP over the remaining period. Okay. Right. Contribution by a company in the capacity of employer to the following funds. Pension fund, maximum allowed is 10%. For pension fund, it cannot be 12%. Okay. Employer's contribution to pension fund under section 36, only 10% of salary will be allowed as deduction. The additional contribution will be disallowed. So what happens is, out of 1 crore 44 lakhs divided by 12 into 2, the additional 2 will be disallowed. $24 lakhs will be disallowed. 24 lakhs will be disallowed. To provident fund, fully allowed as it is paid within the due date of filing returns. The superannuation fund, fully allowed. Am I clear to you? Am I clear to you? Okay. Employees' contribution. according to section 36 read along with section 2 subsection 24. Section 36 talks about employees contribution. 224 is an income head. Okay, what are all income? Okay, employees contribution should be remitted within the due date of the respective law. Okay, within the due date of respective law. Where it is remitted late, then the contribution shall be treated as income and subsequent remittance will not qualify as expenditure. So, whatever is the contribution, okay, employees cannot be under 139(1). It is as per the due date of PF law. It is as per the due date of PF law. Where it is not remitted within the due date of the PF law, it will be treated as income. It will be treated as income. According to the clarificatory amendment in Finance Act 22 and in line with the judgment rendered by Supreme Court in Apex Laboratories, according to the clarificatory amendment in Finance Act 22 and in line with the judgment rendered by Supreme Court in Apex Laboratories case, any payment which is not approved, sorry, no, it's not approved, which is against the ethical standards by various bodies shall not be allowed as deduction. Any payment which is against the ethical practices standards which are issued by various bodies will not be allowed as deduction. Medical Research Council has said that providing freebies and no, if you AF Medical Research Council has said that providing freebies and giving gifts to medical practitioners or hospital is against ethical practice. Hence, which will be disallowed. Be sure about this question. This particular question, this particular adjustment, be sure it's going to be part of. It need not be medical council. It's any body. Okay. It can even be a chartered accountant receiving some payments which is not a, which is prohibited by the ethical standards. Okay, right? So it will not be allowed. Okay, so that okay, this 41 lakhs and 26 lakhs will be disallowed. Am I clear to you? Am I clear to you? Okay. Examல இந்த question answer பண்ணதுக்கு உங்களுக்கு 20 minutes தான் ஆகும். In our classroom, if it takes 1 hour, you should not worry the same time it will take in exam. No. When you are doing it independently, you will write faster. இங்க பார்த்து எழுதுறீங்க, we are talking other things. So, always length of the question பார்த்து பயந்துராதீங்க. 16 marks means we will hit at it with 12 to 14 marks. Okay, right. So, this is over. Interest expenses. Interest not paid within the due date of filing returns disallowed under section 43B. We already have the amount in working note 1. I think it's 5 lakhs or so. We already have the amount in working note number 1. Because out of the total interest, some goes to capital and the other becomes revenue. For loan taken for payment of interest on loan taken for payment of income tax takes the income tax takes the character of interest on income tax. So that will also be disallowed. 3,45,000. Got your point? Yeah, she's right. I should disallow the entire 12 lakhs in two different, okay, interest, which is part of borrowing cost, to be added to the cost of asset. Yeah, you're right. The entire 12 lakhs should be disallowed. 7 lakhs as borrowing cost and another 5 lakhs under 43B. Yeah, she's right. Am I clear? Shall I move on? Yeah. Okay. My dear friends, next, debentures issued to non-resident on which tax is omitted to be deducted. 100% of interest paid to a non-resident without deducting tax at source. However, this will be allowed in FY 23-24 as the default is so 100% of the expenditure comes to 11 lakhs. For State Bank of India, in lieu of outstanding interest, debentures were issued. The company issued debentures. Okay. According to the amended provision of FY Finance Act 22. Okay. Interest needs to be paid within due date, where debentures or bonds are issued in lieu of for outstanding interest, and the same will not be treated as paid. Only in the year of redemption expenses can be claimed. Okay, so the 19 lakhs. That is an expenditure. It is issued only in July 23. From there only, next year only the interest. This year, March 31st, the interest was outstanding. In July 23, they issued debentures. For that debenture, whatever interest they are paying, again 43B might be applicable. If you pay within the due date, fine. Otherwise, not allowed. Provision for gratuity. Payment made to an employee who has retired or resigned, or payment made to family members on death of an employee, allowed to the extent of rupees 50,000. If it is 51,000, entire 51,000 is disallowed. 40A3 is clear. If you exceed, for example, for a transport operator, it is up to 35,000. Suppose I pay 36,000. whole of 36,000 is disallowed. Friends, I should have taken it as credit. Okay, please understand, I should have taken it as credit, but I have put it as a last item. Okay, right. Dividend received from specified foreign company, taxable under IFOS. Write back of trading liability according to section 41, where a supplier foregoes liability, then it should be deemed to, then it is deemed to be a business income. So this supplier foregoing 9 lakhs, running bill who agreed for a settlement of 36 lakhs as against 45 lakhs. This 9 lakhs should be treated as business income. This 9 lakhs should be treated as business income. This 9 lakhs should be treated as business income. Okay. Asset purchased for the purpose of research. Asset purchased for the purpose of research. 100% of cost of asset other than land will be allowed as deduction. So this entire 26 lakhs can be claimed. This entire 26 lakhs can be claimed as deduction. This entire 26 lakhs can be claimed as deduction. Have we seen all the adjustments? You're clear about all the adjustments? I'm not saying all the adjustments will come. Idlen or 5 varlam, or 8 varlam. But now that you have studied, when we study it comprehensively. From there, anything picked up, you know how to answer. Okay. Taxable business income I'm getting 39, 50, 86, 700. 39 lakh, 50,000, 86, 700. 39 lakh, 50,000, 86, 700. Yeah. Okay. Okay. Now, other sources, dividend from specified foreign company. Okay, உங்களோட அண்டர்ஸ்டாண்டிங்காக இது நீங்க எழுத வேணாம் எக்ஸாம்ல, பட் specified foreign company means if company in which the Indian company holds 26% or more of share capital. Okay, இது transfer pricing we will relate it. Associated enterprises means one which holds 26% or more. So on the 26%, okay, more than 1/4 of the 3/4 majority இவங்க இல்லாம பாஸ் பண்ண முடியாது. So more than 1/4 of the shares if I hold, that is a specified foreign company. Okay. A specified foreign company means a foreign company in which the Indian company holds 26% or more of the share capital. Okay, till FY 21-22, the said dividend is taxable at a special rate of 15%. Section 115 BBD. This is Am I clear to you? Please be sure these majority of the adjustment I am in PGBP I have covered. These are only repeated. Probably what I have not covered is some 48.3 which I will cover it again. Some other cash payments etc. Payment to relative in excess of fair market value. In this question 43B is extensively covered if you look at it. And depreciation of machinery, manufacturing, this new 3 amendments, all these things. Did I disallow that? Did I miss out something? This surcharge, this I disallow. I think I missed out on something. 19 lakhs compound. I came to provision, sorry. Because that is one important amendment in, okay. You cannot claim surcharge and HEC till last year, okay. Finance Act 22 has clarified that income tax which is disallowed will include surcharge and HEC as well. Okay. So, idoda parallel amendment வந்து assessmentல சொல்லித்தரேன். Now you have to correct all the past returns. Now you have to file all the past return. If you file within 31/3/23, they are not going to charge any interest because in the last years this was allowed because of a judgment of the High Court. Now the law is amended with a retrospective effect from 2003. That is the year of introduction of these things. So they said that you cannot claim, but if you have claimed relying on the High Court judgment, now file a modified return so that you will be saved. I will teach you that also. Very possible question on that also. 6,85,000. Sorry, the answer should be 39, not 9. Thanks. Is this one? HEC. Shall I, friends? Shall I? Okay. Please compute the tax at 30%. Surcharge will come. Okay. Dividend is taxable only at normal rates. So, computation of tax. Okay. Base tax at 30% since the turnover of the financial year 2021 has exceeded rupees 400 crores. So, this will be into 30% and surcharge at the rate of, do you know the surcharge of Indian domestic companies? Up to 1 crore, no surcharge. Up to 1 crore, no surcharge. 1 crore to 10 crores, 7%. And more than 10 crores, 12%. If it is foreign companies, it is 2 and 5. Okay.
So other than provision for income tax, no other provision will be allowed.
Other than
Provision for income tax,
hmm.
no other provision will be allowed.
Provision for income tax will also be not allowed. Income tax, advance tax, provision for income tax, interest on income tax, surcharge, HEC, any payment with regard to income tax will not be allowed. Only one thing which will be allowed, which I have a question in TDS also, is 234E interest. That is late filing of ETDS returns. That alone will be allowed because it is not your income which you are, it is only a late filing. That interest will be allowed. Otherwise, none of the interest taxes will be allowed under income. GST interest allowed. Penalty only will be disallowed. Right, friends? Okay. So, my dear friends, do not look at the time we took to work the question. What I want to convey to you is we have covered lot of provisions. The whole of PGBP, major provisions we have covered, and also we are able to understand some how to work out. Okay. From this it will be coming. If I just were instead of just working out a question. You want me to show anything, friend? You want me to show any adjustment? Yeah, sure. Which one? HEC? Going to question number 2. This is case law related questions. Okay. This is a case law related question. Okay. Before today evening, I'll put you the case law consolidation material also. I worked it on it. I'll put you the case law consolidation material so that you can use it as a small means. Okay. Right. Specify the treatment of the following items while computing business income. A. Bonus paid to an employee trust as dispute arose on quantum of bonus between trade union and management. Shawson Chemicals is the case law. Shawson Chemicals is the case law. What happens is, we all know bonus will be allowed only if it is paid within the due date of filing returns. Only if it is paid within the due date of filing returns. So, bonus was declared in the balance sheet, provided in the balance sheet, but the employees trade union did not accept it. The employer was not aware of what to do, so they transferred it to an employee trust which is irrevocable. That means which cannot be got back by the employer. From the trust they pay, then the dispute was solved. From the trust they paid. The assessing officer disallowed, saying that, boss, you have not paid it directly to the employees, you have only paid to the trust. Okay. The company proved 2 points. One, it is not revocable. That is, I cannot call back the amount. And second, it is obviously paid before the due date. And the court took a stand. But there is an important item which the court said, which we have to understand. Where the trust has also paid within the due date. Payment criteria 43B. That's why we are saying interest outstanding which is converted into debentures will not be allowed. Interest outstanding which is converted into a new loan will not be allowed. Okay, payment is the criteria here. Where the trust has paid within the due date, then the employer can claim. Where the trust has not paid within the due date, employer cannot claim, even though he has transferred it to an irrevocable trust. Am I clear to you? So, question number 2, please start writing. Shawson Chemicals. Question number 2, Shawson Chemicals. Under that, this will not be allowed. This will be allowed as a deduction. This will be allowed as a deduction only if the employer has paid it, only if the trust has paid it, before the due date of filing returns. Full stop, continue. Where the trust has not paid within the due date, to the ultimate beneficiary, that is employees. Where the trust has not paid within the due date to the ultimate beneficiary, that is the employee, then deduction cannot be claimed. Then deduction cannot be claimed. So here it is. I'll write it. Next, payment of services rendered by a travel agent outside India to a foreign tour operator in India. The foreign tour operator has not deducted tax at source as the foreign travel agent does not have a permanent establishment in India. I am speaking about, okay, Maruti Suzuki Limited, okay, where the judgment rendered by the court was, it is held that where the non-resident has entirely completed his services outside India and has no PE in India, then income does not accrue or arise in India. For the non-resident, income does not accrue or arise in India. The whole of the services are performed outside India. He does not have a permanent establishment in India also. That means income does not accrue or arise in India. Okay, the payer is not liable to deduct tax at source. Okay, are you clear? Okay, the next one is not a question, it's an amendment. It's not a case law, it's an amendment which I also want you to understand. The tour operators said above had to pay compounding fees to a foreign government for violation of stay time of tourist in a particular tourist location. My dear friends, the amended provisions, okay, the amendment material open பண்ணிக்கிறேன் உங்களுக்கு so that this is the amendment which we speak about. Explanation 3. Okay, the term tax would include and would have deemed to have included surcharge and cess or whatever by name called. So it will not be allowed. The amended here is the general deduction where it is said expenditure for any purpose which is an offense or which is prohibited for the law for time being in India or outside India, then the medical practitioner, then the unethical payment. Last also, expenditure on compounding of offense under any law which is prevailing in India or outside India is disallowed. Is disallowed. So understand here. Okay. Secret commission disallowed as per CBDT circular. Okay, if that all they ask you Please remember, secret commission is in the nature of bribe. Okay, the law uses the word when the name of the person who is receiving is not mentioned, it takes the character of illegal payment, so it will not be allowed as deduction. Okay, expenditure on feasibility and market study for an existing business, but the study was abandoned midway, prior village roadshow. PVR, okay, where it is for an existing business and it is abandoned without creating an asset, then expenditure cannot be claimed. Say expenditure can be claimed. Where it is for an existing business and it has been abandoned, so that expenditure I cannot take it to any asset, so it can be claimed. Whereas if it is a new line of business, if it is not for an existing business, if it is for a new line of business, it cannot be claimed. It cannot be claimed. Replacement does not bring a new asset into existence. Hence, it can be claimed as revenue expenditure. Replacement does not mean a new asset comes into existence, so it can be claimed as a revenue expenditure. Am I clear to you? Okay. Depreciation on accessories and peripherals. Federal Bank. Okay. And there is one other case law, BSES Yamuna Motors. Okay. Where it is integral part. Printers and scanners. Where it is integral part, it cannot exist without the other. Okay, printers, and then depreciation of the main item, computers, depreciation rate will be applicable. Then it is a separate asset, only 15% can be claimed. Am I clear to you? Am I clear to you? Issue of convertible debentures. ITC Limited, cost of issue of shares should be appropriated for 5 years, preliminary expenses and the money. Whereas cost of issue of convertible debentures, there is no such provision, so it can be claimed as a deduction. Okay. Okay. Equity shares not allowed. Not allowed. Any expenditure on issue of, because the law says if you are going for an equity share issue, that means you are going for expansion. That means it's a capital expenditure. Expenditure on neon signboard, Oriental Ceramics Limited. Allowed as a revenue expenditure. Expenditure on erection of traffic signal for the welfare of the employees. Infosys Limited. Okay. The asset is not owned by the employer. It has to be given to the government. However, expenditure is incurred for benefit of employee. Hence, it will be allowed. Asset should be given. Traffic signal erect panna, it should be given to the government. So, asset belongs to the government, whereas the benefit is only for employee to safely cross the roads. So, it is. So, like that, any expenditure, bus donated to a school where employees' children are studying, allowed. Any expenditure where you don't own the asset, but the benefit is only for the employees, it will be allowed. Am I clear to you? These are all the repeated case laws on which the questions is asked. Apart from it, Apex Laboratories case law, where they have said if it is okay, just to tell you that the Apex Laboratories judgment, the incentive given by pharmaceutical company to doctors has a direct result of exposing the recipient from the sanctions leading to a ban on their practice. Those sanctions are by law as they are embodied in the code of conduct and ethics, which are normative and a legal binding effect. The conceded participation of the assessee, that is the pharmaceutical company giving it, the provider or donor, was plainly prohibited as far as their receipt by the medical practitioners are concerned. The medical practitioners were forbidden from accepting gift or freebies, was no less a prohibition on the part of the donor also. Thus, pharmaceutical company gifting freebies to doctor is prohibited. It should not be allowed. As this will be a question also. Along with this, those case laws are essential, sufficient for you to just remember. Am I clear to you? Okay. Question number 3, a firm assessment question. Okay. PGBP வரும், firm வரும். Firmல என்னெல்லாம் separate provision நான் ஞாபகம் வச்சுக்கணும். 40B, remuneration and interest is either as per law or as per act, whichever is less. As per act, interest is 12%. Remuneration is book profit based. First 3 lakhs of book profit do every adjustment except remuneration. That is the book profit. First 3 lakhs la 90%, balance la 60%. ரொம்ப கம்மியா இருந்ததுனா 150 வரைக்கும் definitely allowed. Even if it is a loss making firm, 150 allowed. All these things provided it is mentioned in the deed. Suppose it is not mentioned in the deed, during the year I am mentioning, it can only have prospective effect and not retrospective. You cannot, even though you are amending the deed retrospectively for income tax laws purposes, prospectively, the remuneration and interest which is allowed in the hands of the firm is taxable in the hands of the partner under the head PGBP. Under the head PGBP. This is one side. That is the standalone provision available. Capital gains the major change. I will do a standalone question. In this question also, I will do and show how this works. Please try to understand it. Standalone question, when I am doing in capital gains also, you will understand it. By that, you will be able to take it up. Okay, shall I start? X, Y and a HUF, which is represented by Z, are partners in a firm which is engaged in production of telefilms. In the year 2021-22, one partner A retired, but his dues are settled only in 22-23. Only in the year of distribution it becomes taxable. Only in the year of distribution it becomes taxable. If at all the firm has any brought forward loss, share of loss pertaining to the retiring partner, deceased partners, cannot be carried forward by the firm. Repeating, share of loss of retiring partner or deceased partner cannot be carried forward by the firm only for loss. Unabsorbed depreciation ku prachana illa, it can be carried forward. The loss declared in A is 8 lakhs. So we all know 1/4 of the loss cannot be carried forward, 6 lakhs. Unabsorbed depreciation, no problem. Return has been filed within due date of that year. The earlier partnership deed did not authorize payment of remuneration. The partnership was, the deed was revised. So it will only have a prospective effect and not a retrospective effect. To authorize remuneration of 1 lakh to each of the working partner, there will be 3 working partners because A has retired, and simple interest of 15% on the capital account of X and Y, X, Y, Z or fully associated with the firm, working partners. The P&L of the firm shows a net profit of 10 lakhs after debiting or crediting the following: depreciation are charged at the rate specified under income tax law only. Interest of 7,50,000 each was paid to X and Y on the balance for the whole year, which is not acceptable. Rendu vishayam not acceptable. 15% interest pay pannirukanga, 12% da allowed, and it is not for whole year, it is only for 10 months I can allow. 1st June only it is amended. So 10 months only it will be allowed. Remuneration will be added back. Later we will allow it. Interest amounting to 2 lakhs was paid to Z on loan provided by him in his individual capacity. 40A subsection 2, payment to relative. He is not giving it as a partner. Let me tell you. Partner gives loan, interest can only be 12%. It cannot be more than 12%. Because had you brought it as capital, I would have only given you 12%. The capital kondrama loan konadena, I cannot pay you more interest. That is the logic. But partner Representative capacity loan as per fair market value. If the question does not give you fair market value, write the adjustment that it is as per fair market value. Don't disallow anything. Two separate payments of 18 and 9 was made on 1st Feb to a hairdresser, disallowed, because on the same day it has been paid. And two payment of 9,000 and 10,000 are paid in two different dates, allowed. Both has not exceeded 10,000, allowed. Amount of 5 lakhs provided in the books as liability for remuneration to a film artist non-resident, tax deducted at source only at the time of payment, disallowed. 100% disallowed and allow it in the next year only when the default is rectified. 6 lakhs gratuity add back, 150 reduce. Payment made to a concern in which X is having 25% share capital, which means a relative. Substantial is 10 lakhs. A similar concern would charge 48 to disallowance 2 lakhs. Interest of 1.2 lakhs received on income tax refund taxable under IFOS. Compensation received for delay in supply of machinery, 3 lakhs should be adjusted with the cost of the machinery. Should be adjusted with the cost of the machinery. It cannot be separately. It is not an compensation, termination of contract, modification, breach of contract. Idella okay, but idella vandu Saurashtra Cements Limited or case law where they say liquidated damages or compensation which is interlinked to the mission should be adjusted with the cost of the mission. The firm is also providing the following additional information. Amount due to A, the former partner, was 12 lakhs at the beginning. The dues were settled during the year by transferring a land purchased a year back. Appadina short-term capital asset adu. Indexation enakku vandam. Purchased a year back, having a book value of 10 lakhs, whereas fair market value was 20 lakhs. A is eligible for share of profit on transfer of land and any additional amount paid by him is on account of goodwill. Compute the total income stating the reasons of each item. My dear friends, okay, let's understand one by one the adjustment. Okay, first I will write the base law. Any amendment to partnership deed will only have prospective impact and not retrospective. Will only have prospective impact and not a retrospective impact. Okay, any amendment to the partnership deed will only have a prospective effect, will not go back, will not have a retrospective impact. Okay, interest and remuneration can only be paid 1st June. Okay, actual interest paid at 15%. Actual interest paid at 15%. Remember, 7,50,000 into 2. Each of them is paid. X and Y. Each of them is paid. Okay. 7,50,000 into 2. Therefore, capital will be 15 lakhs divided by 15%. This divided by if 15%. 1 crore would have been the capital for which they have paid 15% interest on capital for whole of the year. Okay. Allowed interest as per 40B 12% for 10 months. 1 crore into 12% into 10 by 12. Okay, so the disallowed part will be 5 lakhs. The disallowed part will be 5 lakhs. Anybody not understanding this, please ask me. That is, I am saying that the interest they have paid is for whole year at 15%, which comes to 15 lakhs, which means my total capital is 1 crore. But what is allowed is only 12% for 10 months because deed is amended only from 1st June. So you cannot claim it for the entire year. So only 10 lakhs will be allowed. 1 crore into 12% into 10 by 12. 10 lakhs, 5 lakhs will be disallowed. Is the class clear? Okay. Remuneration to partners. Okay, 36 lakhs. We will later allow it after finding out the book profit. Interest paid to a representative capacity partner will be covered in 40A subsection 2 and not 40B. And not 40B. Okay. So assuming that it is within, unless they give you the fair market value, don't disallow anything. Assume it that it is within the, just write the adjustment that it is covered in 40A2 and say that it is within the fair market value. So I am allowing it. So these are adjustments which you are very much aware. So chinnada edinga podu. Any new adjustment you write it lengthy. Otherwise, these adjustments to a larger extent you know. So do not worry about that. Yeah, yeah, sure. Am I clear? Am I clear? Okay. Right. Okay. Uh, Amount of 5 lakhs provided in the books as a payment to a film artist. Okay. Always TDS either at the time of payment or credit, whichever is earlier. 100% of expenditure payable to a non-resident. Okay. Whatever adjustments you know to a little extent ஒரு வாட்டி பார்த்துட்டோம்னா just ஒரு small note மாதிரி எழுதிங்க. One, it saves time. Two, while revising you know that this is the same adjustment, same type of note you have to write for that. Shall I move on? Okay. 6 lakhs gratuity, 150 paid. Payment to a, okay. Two lakhs disallowed. Shall I move on? $1,20,000 is taxable under IFOS. It is interest on refund. Okay. Compensation for delay in supply of machinery should be adjusted with the cost of machine. It is related to the asset directly. Saurashtra. Okay, minus 3 lakhs. Here is what I want the class to understand. Whenever you are not computing depreciation, if you are computing depreciation, it is very clear, you will make the adjustment. Whenever you are not computing depreciation, any adjustment to asset, if the asset value increases, provide depreciation. If the asset value decreases, reverse depreciation. They would have claimed, they have not made this adjustment and claimed depreciation, even though it is IT rates in the books itself, IT rates they follow. Okay, they would have claimed. Anna, now we are adjusting. What should have gone to an asset? Reduction in the asset, they have taken it as income. I am reversing. Okay, depreciation that needs to be reversed due to the previous adjustment. Am I clear to you? Whenever we do it, please remember this. Now what I am finding out is my book profit. Now whatever I am getting is known as my book profit. $59,02,000. 59,02,000 is my book profit. This is my book profit. Maximum permissible remuneration. Maximum permissible remuneration. As per deed, how much is that? As per deed, how much is that? 1 lakh per partner into 3 into 10 months. Please remember that in the examination tension, don't forget that they have amended the deed only from 1st June. Only from 1st June. Remuneration ka dana? The partnership did not authorize payment of remuneration or interest. The deed was okay. So they have amended it only from 1st June. So remember that and charge. Okay. Okay. 1 lakh per partner, 3 partners for 10 months. As per Act, please remember, okay, 59,02,000 minus 3 lakhs into 60% plus 2,70,000. On the first 3 lakhs, 2,70,000. On the balance 60%. So this minus 3 lakhs into 60% plus 2,70,000, whichever is minimum will be taken. Whichever is minimum will be taken. 30 lakhs. 30 lakhs. So I am hitting at business income. So I am hitting at business income.
So, your first adjustment, if they had interest payable at 10% for the first 2 months,
Only 10% for 10 months.
later they changed it to 15%. Before they had 10%.
So for 10 months for 2 months, 12% for 10 months. Any change will only have prospective effect.
Remuneration part, maximum remuneration, you are giving.
You are asking, yeah, I am giving for 10 months because from 1st June. If your question is, should I also proportionate book profit? My answer is no. The law has not said so.
Remuneration is available for the individual person. One of the part is representative of the
HUF is also considered as group of individuals. HUF can claim self-occupation. Okay, Bhojanwala case. HUF can claim self, whereas company or firm cannot claim self-occupation. HUF is a bundle of individuals. Karta, who is the main person. Shall I progress?
The maximum possible remuneration is maximum of the two, no?
No, sir. Maximum permissible remuneration is either as per act or as per deed, whichever is less.
Whichever is less. Okay.
Yeah, it's not minimum permissible. It's maximum permissible is whichever is less. May I move on? May I move on? Now I want the class to, even if you are not aware of this provision, let me take the opportunity, okay, to explain you. Okay, capital gains la, whenever there is a reconstitution of a firm, what is meant by reconstitution? Admission, retirement, death, dissolution, change in profit sharing ratio. In all these cases, two sections are coming into play. Section 9B and Section 45 subsection 4. Okay, Section 9B is very simple. If a partner is retiring, or if you transfer any asset, then also capital gain needs to be computed. If you transfer stock, then compute business profit. If a partner is retiring and I give him some asset, if I sell the asset in the open market, normal 45, normal capital gain. If I give the partner, partner introducing asset into the firm, book value will be taken as cost of, full value of consideration. Firm giving asset to partner. Firm giving asset to partner. Fair market value on the date of transfer will be taken as full value of consideration. என்கிட்ட ஒரு asset இருக்கு, அதை நான் வெளியில யாருக்கா வித்தேனா என்ன வேல்யூக்கு விப்பேனோ அதுதான் பார்ட்னருக்கும். That is what is section 9B. Simple section, straightforward. So first I am doing it. Okay. Section 9B. Fair market value of asset transferred to partner. So I have transferred and the fair market value is 20 lakhs. This is the short-term capital gain, straightforward provision. Okay, where I give it to a partner also, it is regarded as transfer. Had I sold it in the open market, what price I would have fetched for it, minus either cost of acquisition or indexed cost of acquisition, will be considered as gain. Okay, this STCG, okay, base tax on STCG. What is the rate of taxation for STCG? Partnership firm, 30%. Partnership firms are taxable at a flat rate of 30%. STCG does not have a special rate of taxes. Only STCG on which STT is paid is 15% under a 111A. Otherwise, all STCGs are taxable at normal rates, which is 30%. There is a reason why I am doing this. Therefore, share of profit is nothing but after tax. After tax, whatever I get, okay, if there is a profit, அந்த ப்ராஃபிட்க்கு பேர் ஷேர் ஆஃப் ப்ராஃபிட் இல்ல, நெட் ப்ராஃபிட் பிஃபோர் டாக்ஸ். நெட் ப்ராஃபிட் ஆஃப்டர் டாக்ஸ் இஸ் ஒன்லி நோன் அஸ் ஷேர் ஆஃப் ப்ராஃபிட். நம்ம P&L அப்ராப்ரியேஷன் அக்கவுண்ட் which we start doing from 11th standard. Okay, by net profit, interest on capital, interest on drawings, everything. After that, we find out tax also, and after that, whatever we are going to get is known as share of profit. Therefore, share of profit is share of profit. Okay, 1/4 is all are equal partners. So 1/4, 1,72,000. Is the class clear? Section 45 subsection 4. இது ஒண்ணுமே கிடையாது. நான் பார்ட்னருக்கு எவ்வளவு கொடுக்கணும்? Capital account, I have to pay him. If I pay over and above capital account, then also it is taxable only in the hands of the firm. Then also it is taxable only in the hands of the firm. So here, FMV of asset transferred to partner, 20 lakhs less opening balance in capital account. The opening balance in the capital account is 12 lakhs. Share of profit 1,72,000. For a few minutes, I'll switch it off. I feel very cold. Okay, 6 lakh 20. You are understanding this, right? I should have paid that partner 12 lakhs plus, okay, I sold a land on which I got 1,72,000. I should have paid him 13.72, but I am paying him 20 lakhs. Why am I paying him 20 lakhs? The reasons can be, நாம 11th standardல படிச்சதுதான். The reasons can be revaluation of asset or goodwill or நல்லவன் சார். The law says if it is revaluation of asset and that asset is a long-term capital asset, then this is long-term capital gain. ஆனா இந்த questionல the law, okay, Mr. A is also eligible for share of profit and any additional payment made by him is on account of, okay, if it is due to revaluation and the revalue பண்ண asset long term na இதுவும் long term capital gain, but unfortunately it is not due to revaluation, it is due to goodwill and it is a self generated goodwill, so this capital gain will be treated as short term capital gain. From the top I am repeating this 9b and 45.4. 9b says if you give to your partner in the year of distribution only, taxable. If you give to your partner for what reason? Due to reconstitution of your firm. What is meant by reconstitution? Reconstitution means change in profit sharing ratio, admission, retirement, death, and also if it is due to dissolution, then two types of computation you have to make. In 9b, whatever you gave to your partner, take the fair market value minus what is its cost of acquisition. If it is stock, it is taxable under PGBP. If it is asset, it is taxable under capital gain. 9b over. 45.4, that is also in the hands of the firm. என்ன tax? நீ உன்னோட பார்ட்னருக்கு எவ்வளவு கொடுக்கணும்? You should have paid some 10 lakhs, but you are paying 15 lakhs. Why are you paying 15 lakhs? No sir, my assets are revalued, which means it is equivalent to sale of asset. So pay tax. Or I am paying due to goodwill, or just like that I am paying whatever may be it. If you are paying over and above what is due to a partner, while computing the due to a partner alone, be careful. Opening balance of the capital asset plus share of profit, if any. How to compute share of profit? Whatever you computed in 9b as profit minus tax is what is known as share of profit. அதுதான் நீங்க ஞாபகம் வச்சுக்க வேண்டிய ஒரே பாயிண்ட். Otherwise this will be, the question can be very simple also, but I have taken it up and worked it out. Am I clear to you? Is the class clear? Okay, I am progressing. I am computing the total income now. Business or profession. Business income as computed. This is 29,02,000 less brought forward business loss. Loss pertaining to the share of loss. Total loss was 8 lakhs, 1/4 loss. Am I clear? Am I clear to you? Okay, இதோட tax உங்களுக்கே தெரியும் 30%, so I'm not progressing on that. Okay, so partnership firmல question வந்ததுன்னா I'll do one or two more also in partnership, but I'm telling you 40B careful இருக்கணும். Okay, amendments இருந்ததுன்னா அது, and 45(4) and 9B, இதுல 45(4) 9B can also be in the MCQs, but question by question எடுத்தீங்கன்னா உங்களுக்கு ஈஸியா வந்துரும். 9B ல how much is taxable? 9B is a normal computation of either PGBP or capital gains. அங்க ஒண்ணுமே இல்ல, taxable in the year of distribution. 45(4) ல வரும்போது தான் கேர்ஃபுல்லா அந்த ப்ராஃபிட்டோட ஷேரையும் எடுத்து போட்டுட்டு over and above capital ஆக்கம். If it is due to a revaluation of a long term capital asset, then long term capital gain. If it is due to self generated goodwill, then short term capital gain. If it is for no reason I gave him, then also short term capital gain. Am I clear to you? Okay, okay, friends. Question number 4.
Recent RTP, sir.
Yeah, RTP May 23. Okay. SF Limited is engaged in manufacture and sale of pharmaceutical products. The net profit as per P&L 930 lakhs after debiting or crediting. Opening stock and closing stock were 66 and 63 respectively. Opening stock overvalued by close 10%, closing stock undervalued by 10%. So opening stock value will reduce, which will also increase the profit. If a debit decreases, it will. Similarly, closing stock value will increase, which will also increase the profit. Payment to a foreign company for obtaining know-how for a product launched in the month of November 22. It is a capital expenditure. Only depreciation can be claimed. It is a capital expenditure. Know-how purchase is a capital expenditure. Only depreciation can be claimed. Profit of 2,200 listed shares of listed company. These shares were sold on 27/11 on 22/20. The highest price quoted in the stock exchange as on 31/1/18 is 195. The said shares were purchased before that at 85. EB charges 8 lakhs for the month of Feb and March was unpaid up to the due date of filing return. EB is not a statutory payment. EB is not a statutory payment. 6 type of statutory payment. Any taxes, duty, employer contribution to funds of employee, okay, railways pay பண்ண வேண்டிய payment, bonus or commission, leave encashment, interest payable to bank, financial institution including cooperative. These are only statutory due. EB is not a statutory due. Loss due to hedging contract against future in respect of import of raw material used in the course of manufacturing. Speculation loss. Depreciation charged in the P&L account. Credit to statement to P&L include dividend received from a company. I already saw that adjustment. 32 lakhs received from Zen Lender under an agreement to form a non-compete fees is a business income, non-compete fees. Advance received amounting to 22 lakhs on proposed sale of land, forfeited due to non-receipt of balance as per the terms. The land was purchased in 1819. Advance money forfeited is a income from other sources. Excess on sale of unlisted shares 18 lakhs. Loss of 2 lakhs from hedging contract entered into to mitigate the loss arising due to foreign currency fluctuation towards an imported machinery. It should be adjusted with the cost of the machinery. It should be adjusted with the cost of the machinery. That means this should be added to this cost of the machinery. Additional information, normal depreciation. Depreciation on plant and machinery imported and installed in November 22 and on technical know-how has not been considered while calculating normal depreciation given above. நம்ம CA இன்ஸ்டிடியூட்ல மாத்திரம் தான் எக்ஸாம் क्वेश्चनலயே ஆன்சரும் கொடுக்க முடியும். அப்பனா நீ டெக்னிக்கல் நோவை டிஸ்அலோவ் பண்ணு. ஓகே, அதுக்கு டிப்ரிசியேஷன் மாத்திரம் சார்ஜ் பண்ணு. அதுதானே இதோட அர்த்தம். ஓகே, ரைட். During the financial year 22-23, company has employed 59 additional employees. All these are contributing towards PF. 36 joined on 1/6, 18 joined on 1/7 on a salary of 35,200 will not qualify for 80 JJAA. 5 joined in November will not qualify less than 240 days and it's not a seasonal industry. Apparels, leather, இதெல்லாம் not seasonal. இது pharmaceuticals. The salary are settled by bearer check, which means that will not be eligible. Even in fact, it should be disallowed under 40A3 itself. It will be disallowed under 40. Okay. The unlisted shares were acquired on 18/2/18 for 80 lakhs. 5 cost of index. Okay, for unlisted shares they have given. You are required to compute the total income and tax liability, clearly stating the reason for treatment of each item. The return ought to be filed by applying the provisions of 115BAA. No additional depreciation. No additional depreciation. But 80 JJAA can be claimed. 80 JJA and 80M can be claimed, but you cannot claim additional depreciation. Okay, let's start working out the business income first. Let's start working out the business income part first. அதிலேயே நான் வந்து இது important depreciation as part of the adjustment போட்டுறேன் without wasting time. So opening stock is 66 lakhs, which is 110%. Opening stock is 66 lakhs, which is 110%. $63 lakhs, which is 90%. this is for raw material only. I'm sorry, this is not a hedging contract for shares. Hedging contracts for shares and other things only is a speculative loss. Okay, here these type of hedging contract, for example, in one of the questions they would have told it is a manufacturing company and they had a hedging loss due to shares. That is a speculative loss because it is not their main business. Here it is their main business and they prefixing the prices are allowed, so this will not be seen as a for speculative loss. This will not be seen as a speculative loss. Since I have already covered these things, I am not explaining in detail. Profit on sale of unlisted shares taxable under AFOS. Loss of 2 lakhs on hedging entered to mitigating the loss of for imported machine was insolvent. No, when is it purchased? Huh? 15th October.
Hedging loss related to the cost of acquisition of asset. It's already reduced. Why do we have to reduce it further? Cost of delivery. 2 lakhs.
Added. What's the cost of asset? Am I clear? Am I clear to you? Shall I move on? Okay. Or take a, okay, second taken care. That is 115 JAA, and the last is for capital gains. Okay. ஒரே ஒரு நிமிஷம் ஃப்ரெண்ட்ஸ். Just want to check the answer. Six lakhs, 7 lakhs connector. 65 lakhs addition. 48 lakhs addition, 2 lakhs addition. Yeah, 48, 3 misspelled. That's the difference. 48, 3 and the employee is paid in barrel check. That last item. Okay. One படிக்கும்போது ஞாபகம் வச்சிருந்தேன். How many employees? The salaries of 10 employees who joined on 1/6 are being settled by barrel check every month. So for 10 months, 10 employees, 15,000 per month. Okay. 10 employees, 10 months, 15,000 per month. Am I clear? Am I clear? Okay. With regard to listed shares, how to compute the value if the asset is, if the shares are purchased before 31/1/18. Okay. Actual cost or fair market value as on 31/1/18, whichever is higher. However, it cannot exceed sale value. Repeating, for listed shares purchased before 31/1/18, cost of acquisition will be actual cost or fair market value as on 31/1/18, whichever is higher. However, it cannot exceed the sale value of the shares. So I'm computing capital gains next. Section 112A, listed shares. Section 112A, listed shares. The information says profit on sale is 297. These shares were purchased at 220 per share. These shares were sold for 220. The highest price quoted on that is 195. The said shares were purchased for 85. STT is being paid. 2,200 shares sold at a profit of 297. In the books of accounts, it will be 2,200 into 85. 2,200 into 85, which will be my purchase price. Which will be my purchase price. 2,200 into 85. 1,87,000 is my purchase price, and I have made a profit of 2,97,000. So my sale price, my sale value will be 4.84. My sale price will be 4.84. Repeating, in my books of accounts in the 31/1/18 purchase sale, I purchased for 85 rupees. I sold for 220 rupees. So 2,200 shares into this difference itself will be equal to the profit, or 2,200 shares into 220 will be 4,84,000. Am I clear to you? Okay, right. Full value of consideration 2,200 into 220 less cost of acquisition. Okay, indexation benefit is not available for listed shares. Indexation benefit is not available for listed shares on which estate. However, the cost of acquisition, since it is purchased before 31/1/18, actual cost or FMV as on 31/1/18, whichever is higher, which cannot exceed sale value. In this case, anyhow, it's not exceeding 2,200 into 195. Okay, 55,000. This is not going to be taxable because first 1 lakh is not going to be taxable. Though when I'm working tax, I will take it. In the case of listed shares under section 112A, first 1 lakh not taxable. Balance is taxable at 10% if at all there. In the case of unlisted shares, the question says that unlisted excess on sale is 18 lakhs. 18 lakhs. The unlisted shares were acquired for 80 lakhs. So 98 lakhs will be my full value of consideration. ICOA, because it is held for more than 2 years, correct? Okay. It is purchased in 2018, sold in 2023. Okay. So 80 lakhs into 331 divided by 18 to 2018. 1718 is 272. The 1617 is listed shares confuse பண்றதுக்காக கொடுத்திருக்காங்க. ஓகே, நம்ம அதை பார்க்காமயே கன்ஃபியூஸ் ஆகல. This is taxable at 20%, my dear friends. Even if an assessee is following alternative tax regime, that is only for the business income, it is taxable. Okay, special rates of taxes still holds good. While working out the tax, I'll explain you more, which will be interesting for you to understand. Shall I proceed? Shall we go to the total income computation? Other sources income are one by one. opening stock asset, the electricity loss hedging, credit a dividend 5,20,000. Advance money forfeited, 22 lakhs. Advance money forfeited note செய்திருங்க that it will be taxable under IFOS. 2014 முன்னாடி இருந்தாதான் it's adjusted with cost of acquisition, that you need not worry, but it is taxable. Okay, excess on unlisted shares taken care. Okay, now gross total income. Employees who have completed at least 240 days, whose salaries are not exceeding 25,000, who are covered under PF, and whose salaries are paid by approved modes. You can see in the 36 employees, 10 employees will not qualify because they are paid by bearer check. Only 26 employees will be covered. Other 18, the salary exceeds 25,000. And for the 5 who joined late, the number of days, 240 days criteria is not fulfilled. So only 26 employees. Salary of 26 employees, 26 into 15,000 into 10 months.
Salary limit was 21,000.
25.
Before
Before manufacturing கம்பெனிக்கு மாத்திரம் இருந்தது, அதுக்கப்புறம் ஆல் செக்டார்ஸ் கொண்டு வந்தாங்க. 21 ஞாபகம் இல்லை எனக்கு. Yeah, 10 became, but now it's 25. Okay, shall I move on? Computation of tax. I want you to work along, understand it. Under 115 BAA manufacturing, sorry friends, BAA. I want you to understand. Their business income is taxable at 15%. Business income is taxable at 15%. All special rates are taxable at special rate itself. Any other income is taxable at 22%, as like our normal structure. Okay, there are two sections, my dear friends. Okay, 115 BAA BAB. Sorry, 115 BAA BAB. If you look at the way, this is for manufacturing, this is for others. Okay, business income is taxable at 15% here. Here everything is taxable at 22%. In the 15% benefit is only for business income. Is only for business income, is not for other income. இப்போ ஃபார் எக்ஸாம்பிள் அதர் சோர்சஸ் இல்ல ஐஹெச்பி இருக்குன்னு வச்சுங்களேன், ஹவுஸ் ப்ராப்பர்ட்டி இருக்கு, இது எல்லாமே 22% தான் taxable. இது எல்லாமே. And for everything surcharge is 10%, HEC is 4%. For everything surcharge is okay. So if you look at business income taxable at 15%. So if I take this, I will take business income minus 80 JJA. Minus okay, this is taxable at 15%. This is taxable at 15%. LTCG under 112A not taxable as it has not exceeded 1 lakh. LTCG under 112 taxable at 20%. Round off பண்ணோம், அதனால நானே இங்கே பண்ணிடுறேன் round off. Tell me.
entirely 22%. B is only
BAA is 22%. BAB is 15%. Yeah, new manufacturing company 15%. Yeah, BAA is 22%. BAB is yeah, I stand corrected. If it is B, in the BAA, then sorry, then she's right. It should be 22% only. But I took thanks for that opportunity. But if it is BAB, please be careful. If it is BAA, as yeah, BAA is for non-manufacturing or manufacturing concerns which are started before 2014 or whatever is the date. Correct. I thought. Yeah, yeah. BAA 22% தான், sorry. BAB தான் 15% for new manufacturing. சொல்லுங்க. Tax can also be rounded off to 550 or okay. ஞாபகம் வச்சுங்க, இது BAB இருந்ததுன்னா பிசினஸ் இன்கம் மாத்திரம் 15%, மிச்ச எல்லா இன்கமும் 22%. ஓகே. Shall I move on? Shall I move on, friends? Okay. This is also an RTP question. Beta LLP in India is engaged in export of software through two units. Unit 1 is located in special economic zone, so they will get 10 AA depending upon the year. Unit 2 is in a DTA. The LLP furnishes the following information of 4th year of operation. Whenever we are going to do three things for a non-corporate SSI: one exemption 10 AA, one expenditure 35 AD, one type of deduction 80I, you need to do AMT also. You need to do AMT also. Please write and keep 3 times in which AMT needs to be computed. Alternative minimum tax. 3 cases in which it needs to be computed are exemption under 10 AA, expenditure under 35 AD, and deduction 80I to 80R. Am I clear? Okay. So let's continue. Export turnover, domestic turnover, duty drawback, profit on sale of import entitlement, salary paid, other expenses, net profit. Additional information. Expenses of 41 lakhs is not disallowed, are disallowed under 43B, and export sales proceeds received in India is only 1600 lakhs. Aduthaan export turnover. Export turnover for 10AA is not what has been exported. It is what is received in India. Export sales of 1800 lakhs include freight and insurance 300 lakhs attributable to delivery outside India, which will not qualify for 10AA, which will not qualify for 10AA, and realization of 1600 include freight and insurance 180 attributable to delivery outside India. Additional information pertaining to Unit 2. Export sales received in India 970. அதுக்கு வந்து exemptionலாம் ஒன்றும் கிடையாது. ஓகே, அது சும்மா உங்களை கன்ஃபியூஸ் பண்றதுக்கு. Expenses charged which are disallowed under 40A3 is 55 lakh. Determine the tax total income. இப்படி தான் இருக்கும் question. நாம 10AA போடுறதுனால we should ensure that we are doing the MAT provisions also. One more information. These two will also not qualify for 10AA. It has nothing to do with export. It has nothing to do with the export profits. These are not core business profit. These are not core business profit. So, core business, எனக்கு வர பைசால எனக்கு என்ன? இதெல்லாம் இந்தியால கொடுக்கிற benefit. இதுக்கெல்லாம் we need to pay full tax and it is will not qualify as a business profit. Am I clear to you? Am I clear to you? Okay. I will take this from the RTP itself. I will take it from the RTP itself so that we are not wasting the classroom time. உங்க எல்லாத்தையும் RTPயும் இருக்கும், and straightforward shall we go to the answers in RTP instead of working a detailed answer. Please consider this so that I can work out my own questions, and important RTP questions I will definitely work it out. இப்போ 10AA exemption எப்படி compute பண்றோம்? Okay. Total turnover of unit 1 1800. Okay. How do I arrive at 1800? Okay. My dear friends, this 1800 export turnover plus 300 domestic turnover minus 300 which is freight and okay insurance. அது வந்து நான் export turnover அது வந்து நான் numeratorலயே எடுத்துக்க மாட்டேன், denominatorலயே எடுத்துக்க மாட்டேன். I will not take it both in numerator and in denominator. Look at this. 1800 plus 300 minus 300 being freight and insurance attributable, such freight has been excluded from export turnover. The same will also be excluded. Export turnover எவ்வளோ? 1600 minus 180. 1600 I will reduce the freight and insurance minus 180. Export turnover is 1420. 1420. Am I clear to you? Okay. Now net profit, add 43B disallowance less profit which have nothing to do with export, duty drawback and profit import entitlement. இதுதான் இந்த 666 தான் என்னுடைய profit which qualify under 10AA. திருப்பி சொல்றேன், 10AA க்கு என்ன, what is the criteria of me giving 10AA? You are bringing in foreign exchange for me. Whatever profit you earned on that, I will give you exemption. இந்த duty drawbackல நீங்க ஒண்ணும் எனக்கு foreign exchange கொடுக்கல. இந்த sale of profit import entitlementல நீ ஒண்ணு எனக்கு foreign exchange சம்பாதிச்சுக்கு. இந்த 1420 தான் எனக்கு foreign exchange. 1600 minus 180. 180 is reimbursement. That you don't say that you have made profit or foreign, okay? So in the 1420 that really you have benefited me, the benefited the country. So the exemption will be 666 into 1420 in divided by 1800. Profit into ET by TT. Profit into export turnover by total turnover. First 5 years 100% exemption. Next 5 years 50% exemption. Last 5 years 50% provided you transfer it to export profit reserve account. Repeating 10AA. First 5 years 100% exemption. Next 5 years 50% exemption. Next 5 years 50% provided, in this case 100% of export profit. What is export turnover? Money brought into India in convertible foreign exchange within 6 months from the end of the year. Reimbursement எடுத்துக்க மாட்டேன். Divided by total turnover. அதுலயும் நான் reimbursement minus பண்ணிடுறேன். Okay, அது debit and credit match. Okay, so what is profit? Profit from regular business activity. Don't tell me that duty drawback or sale of import and license. Okay, are you understanding this? Okay, now I am going to the main answer. So 751, 710 plus 41 disallowance. இங்கு 840 plus 55 disallowance. Total 895. Repeating, my dear friends, in the 710 la this 41 is disallowed. So 710 plus 41 751. 840 plus 55, okay, disallowed. Okay, so and now we worked out 10AA. So my total income is 11 crore 20 lakh 60,000. 11 crore 20 lakh 60,000. Are you understanding? 11 crore 20 lakh 60,000. If I add 10AA, that will become my adjusted total income. That will become my adjusted total income, which is 1646. Which is 1646. If I add my 10AA, I will get my adjusted total income. Is the class understanding? Nama firm normal tax rate 30% plus 12% surcharge plus HEC. Ana AMT prakaram pona 18.5%. 18.5% plus 12% plus HEC. Normal tax is better. Normal tax is better. Repeating, 10AA question vandaduna, what are all the things to keep in my mind? I should remember 10AA is for export profit. What is export profit? From the money you are bringing it into India, what is the profit I have earned? If I am giving some incentives here, that is not money brought into India. If you are bringing reimbursement, that is not money brought into India. From the money brought into India from turnover, I will give you the proportionate profit. 100% first 5 years, next 5 years 50%, last 5 years 50% provided you transfer it to reserves. Is the class clear? Any doubt? Okay, I hope you can look into it in RTP. I hope the class can look into RTP. Okay, the question number is 21. Okay, the question number is 21 in RTP. Okay, which has the solution, so that I can go to the next question, which is also own question, but I have one particular adjustment. Normal provision la eppadi varum, mat la eppadi varum, alternative tax regime la eppadi varum. That's what I am going to work out now. One particular adjustment. Okay. Question number 5. Georgette Private Limited commenced manufacturing activity on 15th April 22. The company gives you the following details and seek your advice as to whether they should go for normal tax regime or alternative tax regime. Net profit before allowing depreciation as per books. After allowing depreciation as per books, but before allowing the following items. Before allowing contribution to National Lab for promotion of research. In the normal regime, it is allowed. In the MAT regime, it is allowed. Whereas in the alternative tax regime, it will not be allowed. MAT la idha na add panna maten. Oruvela net profit total after ella kuduthunda MAT la. What is MAT? Okay, MAT enala ungalku romba simplified ah solda mudiyum. 4 appropriations that needs to be added back. Transfer to reserve, dividend, okay, taxes, provision and taxes, deferred taxes. 4 appropriation that needs to be added back. If it is credited, reverse it. So repeating, transfer to reserves, dividend, appropriations, that is income tax appropriations and deferred tax appropriations. Provisions of contingency nature and provision for loss of subsidiary company. All exemptions except 10AA. 10AA alone you cannot allow it. All exemptions will be allowed. In MAT also it will be allowed. MAT alone talks about brought forward loss or unabsorbed depreciation, whichever is less as per books. Okay, so one by one, contribution to in-house expenditure on research allowed both under normal provision and under MAT, but not allowed in alternative tax regime. Plant and machinery purchased in September and used immediately. Both under normal method, I can claim both normal depreciation and additional depreciation. In MAT, I cannot claim anything. MAT book depreciation. In MAT, I cannot claim anything. Whereas in alternative tax regime, I can only claim normal depreciation. I cannot claim additional depreciation. January, okay. Provision for loss of subsidiary company, not allowed. Ellatli not allowed. Ellatli not allowed. Payment to technician without deducting tax at source. In normal method, only 70% is allowed. MAT la andha mari only the add back pannun sollal. MAT la entire 750 can be claimed. In 115 BAB also only 70% is allowed. That was the normal computation. Provision for gratuity. Normal provision not allowed. Normal computation not allowed. 115 BAB not allowed. But one case law, XJ forging, has unfortunately said that provision for gratuity is not a contingent liability. So while computing MAT, it will be allowed. It will be allowed. Am I clear to you? Okay, right. CSR expenditure not allowed. Guarantee commission paid to director for providing personal guarantee allowed adu, but without deducting tax at source, 30% disallowance. Diminution in the value of investment engagement may not allowed. Crossed check, I will tell you. Regularization fees not allowed. It is a penalty. Bonus provided. 75% only paid before due date, as the remaining employees have left. Okay, so 43B disallowance or allowance. Donation to PMNRF. The company also has an house property which is let out on a monthly rent of 120. The said income is not credited in the profit above. Interest earned on surplus fund invested is also not credited. Dividend received from investments. The company has employed the following personnel during the year. Same 80 JJAA information for 2 employees from the month of May. Salary till the year end was paid in cash as they do not have sufficient proof to open bank account. The company has declared a dividend of 10 lakhs. This is for ATM purposes. Okay, leave it to me. I will take you through, but every step let us understand so that you are clear about how the treatment under normal, MAT and alternative tax regime is. இந்த மாதிரி கொஸ்டின் வராது. ஆனா இந்த கொஸ்டின் மூலியமா நான் உங்களுக்கு வாட் ஐ எம் ட்ரைங் டு கம்யூனிகேட் இட் என்ன கேட்டாலும் உங்களால ஆன்சர் பண்ண முடியும். அவ்வளவுதான் நான் சொல்றேன். ஐ எம் நாட் சேயிங் திஸ் கொஸ்டின்ஸ் வில் கம். ஐ எம் ஒன்லி ப்ரிப்பேரிங் யூ கம் வாட் மே. அட் த எண்ட் ஆஃப் டுடே when you are going back home PGBP தூக்கி போட்டு போணும் நீங்க. let them ask me anything I know how to answer. அதுதான் என்னோட இன்டென்ஷன். ஓகே, not that I am giving you an examination question. ஓகே, ஆப்வியஸ்லி அது ஈஸியா தான் இருக்கும். Let's see. I'm writing a detailed note so that it will become a for you to later also add depreciation as per books in the normal and alternative regime, but in math computation only book depreciation will prevail. Okay, however, in math, if there is any revaluation depreciation, that will be added back. Are you understanding? Mathல bookல இருக்கிற depreciation தான், இங்க ஒன்னு adjustment கிடையாது. Suppose there is an asset which has been revalued, for which on that revaluation value depreciation is provided. அதை add பண்ணுவேன். அதாவது total depreciation add பண்ணி non-revalued values minus பண்ணுவேன். I will send you a one page note for math. Okay, one sheet note which will be helpful to you. So now I add back 16,70,000 in the other two regimes. one by one, let me look into the allowable items. Contribution to National Lab for research. Under alternative tax regime, section 35 cannot be claimed. Under alternative tax regime, section 35 cannot be claimed. Whereas you cannot claim this under alternative tax regime. இதை நான் ரிவர்ஸ்ல இதெல்லாம் மைனஸ் பண்ணி கொடுத்திருந்தா ஆட் பேக் பண்ணும்போது நார்மல்ல ஆட் பேக் பண்ணுவீங்க. ஓகே, மேட்ல யூ வில் ஐ மீன் நார்மல்லையும் மேட்லயும் நீங்க ஒண்ணுமே பண்ணிருக்க மாட்டீங்க. இஃப் ஐ ஹவ் டிடக்டட் இட், whereas okay, under the other system you would have taken it. Am I clear to you? Okay. மேட்டுக்கு புக் டிப்ரிசியேஷன் தான். அங்க வந்து இந்த ஐடி லா டிப்ரிசியேஷன் கிடையாது. அங்க டிப்ரிசியேஷன் ஆன் ரீவேல்யூவேஷன் தான் இக்னோர் பண்ணுவோமே தவிர மேட்டுக்கு ஒன்லி புக் டிப்ரிசியேஷன். Am I clear? Shall I move on? Under any method, this provision will not be allowed. Uh, sorry, இது 20, இது 7.5. Rate of depreciation. Payment to technician, payment without deducting tax at source. 70% of expenditure will only be allowed under normal and alternative. However, there is no such disallowance under MAT provisions. So what happens is 7,50,000 provision for gratuity. This is disallowed under 40A subsection 7 in normal and alternative regime. However, in MAT computation, XJ forging's case, it was held that this can be claimed as a deduction. So inga matram matla matram you can claim that 6,50,000. You can claim that 6,50,000 because they said that it is not a contingent liability in that particular case law. So matla if I had given you a P&L account debiting this, while computing mat, don't add it back. While computing mat, don't add it back. For TDS also, suppose in the P&L account there is a 1 lakh amount. Tax has not been deducted. I will add back 30,000 while doing normal computation. While doing math, I will not do anything, which means it is allowed. It is fully allowed. That's why here I am fully allowing it. Whereas here I am only allowing 70%. CSR expenditure. Not allowed. Not allowed. Whereas here I can claim, they don't say that it should be added back. Here not allowed. Repeating, not allowed in the normal and alternative tax regime, whereas no such provision of disallowance in the MAT regime. MAT la add back pannunu sollala, so I will allow it. I will deduct it. Okay. Guarantee commission, same manner. Here it will be 70% which will be allowed under these two regimes, whereas here I can claim the entire 1 lakh. I hope you are all understanding. Am I clear to you? Okay. Remember, allow பண்ணுவேனா இல்லையா, அதுதான் இந்த கொஸ்டின். நான் என்னுடைய பர்பஸ் இதையே நான் மைனஸ் பண்ணின்னு கொடுத்திருந்தேன்னா நீங்க ஆட் பண்ணமா கூடாது. You can think the other way also. Diminution in the value of investment is a contingent item not allowed in any of the eras. expenses in violation of 40A3. You would disallow it. In other words, you will not allow it. But MATல அது add back னு எங்கேயுமே சொல்லல. MAT is just a format. அந்த formatல இருக்கிற items தான் you can add or reduce. Nothing else you can do. Regularization fees, my millennia developers, that is the case. Okay, it is held regularization fees is also like penalty. Is like penalty. You are not supposed to do, you have done. So what you are paying is a penalty. Hence not allowed. However, in math computation, penalty can be deducted. So math computation, there you can still claim 3 lakhs. Am I clear? Am I clear? Okay. This is a bonus. Okay. Bonus outstanding on 31st March. Bonus outstanding on 31st March. 75% only paid within due date of filing. Hence, under normal and alternative, only 75% will be allowed. Under MAT, 100% can be claimed. There is no such disallowance. So, here 5 lakhs. Am I clear? Am I clear? Okay. Donation to PMNRF will only qualify for 80G. But that cannot be claimed under alternative tax regime. But suppose for sure donation is debited in P&L account. எப்பயுமே donation in normal computation I will add back. In alternative computation I will add back. Will I add back under MAT? Will I add back under MAT? No, I will not, because format MAT என்றது format. Appropriations, provisions, exemptions இதெல்லாம் தான் add back பண்ண சொல்றாங்களே தவிர nowhere they have said TDS, donation, இந்த மாதிரி non business expenditureலாம் add back பண்ணுன்னு எங்கேயுமே சொல்லல. So under MAT that donation will be allowed. Okay, donation to PMNRF, detailed I am writing. For normal, 80G can be claimed. For MAT, it can be claimed as expenditure. For alternative, it cannot be claimed. Am I clear to you? So here minus 1 lakh. 1,50,000. Am I clear? Am I clear to you? Okay. In a given, I will give you one page note on math. I will include this. நான் capital gains include பண்ணிருக்கேன், math include பண்ணல. Okay, one page which will tell you what needs to be added, what needs to be reduced. But generally, mathன்றது அதுக்கு பேரே book profit. A math is computed on book profit. Whatever there in books of accounts. Books of accounts நான் donation இருக்கு. Allowed தாங்க. அங்க add back பண்ண வேண்டாம். Books of accounts நான் TDS பிடிக்கலனாலும் allowed. Books of accounts ஒரு capital expenditure debit பண்ணிருக்கேன். Allowed. You need not add back because math doesn't say so. Math doesn't say so. Only normal computation and alternative, we go according to the law. In alternative, I cannot claim additional depreciation, deductions other than some things. Am I clear to you? Okay. Other incomes. IHP. Okay. The company also has an house property which is let out for 1,20,000 for 11 months. The said income is not credited in the above. Okay. 1,20,000 into 11 minus standard deduction of 30%. 1,30,000 into 11 minus standard deduction of 30%. If it is not credited in P&L, it will not have any impact in MAT because P&L is the only basis. If it is not there in the book profit, it cannot be then anything in MAT. Anything in MAT. Am I clear to you? Am I clear to you? So it's an addition. It's an income. 1,20,000 into 11 into 70%. I'm directly calculating 70%. IFOS. Example எப்படி போடாதீங்க, rent received. Okay. The net annual value standard deduction போடுங்க. இங்க to save time I'm doing like this. Interest 3,11,000. $48,300 disallowance for employee salary. How much is that? For 2 employees employed from the month of May, so 23,000. Okay, 23,000 into 11 months into 2 employees. 23,000 please kindly check the total once. Is the total correct? Is the total correct? Shall I take it? Shall I assume and progress? Okay. Deduction under section 80G. I can claim the PMNRF deduction only under normal regime. Deduction under section 80 JJAA. This can be claimed both under normal regime and under alternative tax regime. 80 JJAA you can also claim under. I have already written the condition. Once more I am repeating. Salary should not exceed 25,000. They should have employed for 240 days or more. PF covered employees, they should be PF covered and it should be paid by approved modes. So when I look into in this question, I understand out of this 25 people, okay, out of this 25 people, for 2 people, out of this 25 for 2 people, so 23 people here qualify. These does not qualify, this does not qualify. Okay, 23 people qualify. 23 into salary is 23,000 per month into 11 months, the whole into 30%. The whole into 30%. Are you understanding? 30% of additional wages. 30% of additional wages. Okay. 23 into 23,000 into 11 into 30%. சொல்லுங்க சார், you're stuck somewhere. Why 80G is not in MAT? MAT is based on books. I have allowed in here itself 1,50,000. I can claim it in my books of accounts itself there. I need not income tax law la da anga disallow panni inga minus pannu. Normal computation. Here it is allowed in books itself. Otherwise, MAT is a format. None of the deductions you can claim. Nothing you can claim. MAT is purely format based. ATM. My dear friends, ATM is a cascading effect for dividend. Is a cascading effect for dividend. Okay. Actual dividend received, which is 15 lakhs, or dividend paid. Dividend paid within 30th September, whichever is less. What is the dividend paid in this question? Last information gives you 10 lakhs, which is nothing but here the company has declared a dividend which is estimated to paid. Okay, so 10 lakhs. This ATM can also be claimed in alternative tax regime. Anyhow, MAT is not going to be that very effective because MAT rate is only 15%, whereas my normal income itself is higher.
40 A3, that's a disallowed. The salary has not been allowed. You haven't included.
No, this is what they have given you is net profit after allowing even depreciation, before allowing the following. So salary would have been allowed. Net profit after allowing even depreciation, but the following items alone they are having doubt. That's why they are the question has started with the words, not with the sales. The question has started with the word net profit after allowing depreciation also, but before allowing the following. So salary is already allowed. That's why I disallowed that salary. 80JJ. Illa. Additional information ellame outside the P&L account. Okay. Base tax. Please understand how to compute base tax. 25%, because this is the first year. This is the first year. So turnover 25% of total income. There is no income which is taxable at a special rate. No capital gains, no winnings. So here it is directly 25%. Here it is directly 25%. Chumma edhunadhu 15% on book profit. Anyhow, adu ipo important illa because that comes much lesser. So only normal. Okay. Here 15% of business profit. Here 15% of business profit under alternative regime. Business profit is without including rental income and IFOS. Without including rental income and IFOS. Without including rental income and IFOS, you might have one particular doubt. Sir, எனக்கு dividend IFOS தான் வருது, ATM நான் அங்கதான் மைனஸ் பண்ணணுமா? law is silent. Law is silent there. Okay, law has not explained. So நாம என்ன பண்ணுவோம்னா, we will take it only in against that dividend income because அதான் நமக்கு beneficial. இங்க 15%, அங்க 22% tax. Okay, okay, I'll write the notes for that also. Okay, so 87 lakh 16,300, add back rental income 9,24,000, add back IFOS 311 and 15, 3,11,000, and 5 lakhs. Why I say 5 lakhs? 15 lakhs minus 10 lakhs. That's why I add back only 5 lakhs. I add back only 5 lakhs. Do you understand, my dear friends? Okay, repeat பண்றேன். என்னுடைய 80M நான் வந்து IFOS ல கன்சிடர் பண்ணாதான் எனக்கு beneficial. If I consider it an IFOS, it will be more beneficial for me because those are taxable at 22%, whereas my normal business income is only taxable at 15%. My normal business income is only taxable at 15%. So that's why I feel it is better to consider there than here. Any doubts in this? Any doubts in this? Okay. In fact, I will look into more detail. Okay. Rental income taxable at 22%. Okay, so that this will be more easier for you to understand. Rental income taxable in 22%. Okay, IFOS minus ATM taxable at 22%. Okay, nothing but this plus this minus 10 lakhs. So 8,11,000 into 22%. Okay, now if you can understand this, it will be beneficial. Okay, நான் தான் அந்த சுவிட்சை எங்கிட்ட விட்டுருங்கன்னு சொல்லியிருக்கேன்ல நானு. How much it comes to you all? Which one? 87 lakh 16,300 minus, okay, 9 lakh 24,000 minus 3 lakh. நான் பிளஸ் போட்டேன். எவ்வளவு வருது உங்களுக்கு டாக்ஸ்? மைனஸ் தான். எவ்வளவு வருது உங்களுக்கு அதோட டாக்ஸ்? 87 lakh 16,300 minus 924 minus 311 minus 5 lakhs into 15%. 10 lakhs வருதா? No, it is plus. ஏன்னா நான் மைனஸ்ல வச்சிருக்காங்க.
So only when we get minus over there, we get added to.
10,47,195. Base tax. So normal system will be beneficial. Normal system will be beneficial. Okay. The maximum adjustments are only this. The maximum adjustments in PGBP. You can now take any question and work. Past questions, present questions, some other books questions. The maximum adjustments in PGBP are only this. Okay. Probably the only thing which I have not covered here is 35 AD. I'll cover it somewhere else. Okay. Otherwise, this is the maximum adjustments that can happen in PGBP. Okay. Only we consider it as big, etc., etc. Okay. If you are all there in the WhatsApp group,
Yes.
okay, right, or some way, I will put 2 or 3 questions today for you to work. Just work out and bring me the answers. Just work out and bring me the answers so that you can feel confident, more confident. Am I clear to you? Okay, right.
IFRS adjustment, not necessary. Not IFRS.
What do you mean by that? IFRS? Ind AS. Yeah, yeah, I'll give you. Don't worry. Ind AS adjustments are nothing but for revaluation. I'll give it to you. Okay, I'll give you. Except for plant machinery and demerger transitional reserves. Not, I haven't seen question except when it was amendment was there. But anyhow, if you want to practice, I'll give you question. Why isn't MAT beneficial? No, MAT is either normal tax or MAT, whichever is higher only is payable. When MAT is lower, where is the question of computing further? Yeah. MAT is beneficial. Okay, right. Okay. See, in the case of capital gains, this is the holistic theory, but for exemption. So if you can look into this theory whenever your time permits, okay, this will give you the holistic, what is cost of acquisition, what are all the ways of computation, everything, so that these 4 pages will cover whole of the capital gains chapter. Whole of the capital gains chapter, this 4 pages will cover for you. Shall we move on to capital gains? Shall we move on to capital gains? Okay, now 1 hour we will study and then we'll take the break. Okay, whatever questions we complete up to this. Okay, capital gains, slum sales can be the question. Let in the units no வந்திருக்கு. அது இப்போ last year தான் introduced, so அது இப்போ இவ்வளவு சீக்கிரம் யாருக்கும் ரெடி ஆகாது. So we will just check that what it is. Amendments in capital gains is not there. amendments is capital gains is not there. ஒரு புக்ல கூட நான் amendment in capital gain பார்த்து டென்ஷன் ஆயிட்டேன். அப்புறம் பார்த்தா CII சேஞ்ச் ஆயிருக்குன்றாங்க. Unacceptable amendment அது. Okay. So let's see. Question number 6. I'm going to concentrate on slump sales. Camera Lens Limited is in multiple business. It decides to hive off its lens unit by way of slump sales. Specify the tax impact and tax payable, ignoring other parts of the income. Details provided for lens division. In the case of slump sales, how do I compute the gain? The law says, in the case of slump sales, okay, the gain will be computed. Okay, I want to work out and show you. Okay, the gain will be computed as full value of consideration will be FMV1 or FMV2, whichever is higher. Outgoing assets fair market value or incoming assets fair market value, whichever is higher. Once more I am repeating, outgoing assets fair market value. Outgoing assets na என்னவா இருக்கலாம்? ரெண்டு விதமா assets பிரிக்கலாம். ஒன்னு performing assets for the purpose of business. Second, more like investments. ஒரு plant and machinery. Okay. Even debtors, stock, இது எல்லாமே businessல day to day யூஸ் ஆற ஒரு asset. We call it as performing asset. இதுக்கெல்லாம் book value தான். எங்கிட்ட surplus இருக்கு. நான் listed sharesல இன்வெஸ்ட் பண்ணிருக்கேன். unlisted sharesல இன்வெஸ்ட் பண்ணிருக்கேன். அது subsidiary கம்பெனியாவே இருக்கட்டுமே. I have just kept it as invested. Jewelry இன்வெஸ்ட் பண்ணிருக்கேன். land இதுக்கெல்லாம் market value. landக்கு மாத்திரம் stamp value is the best market value. So again summing up, outgoing assets or incoming assets ரெண்டுத்துக்கும் valuation அதே ஸ்டைல் தான். outgoing asset na, if I receive a land as consideration also stamp value, if I give a land as a slump sales also stamp value. Immovable property stamp value. Shares fair market value. Unlisted shares proportionate value. அந்த கம்பெனியோட net worth என்ன? நாம எவ்வளவு percent ஷேர் வச்சிருக்கோம்? அந்த கம்பெனியோட net worth 5 crores. நான் ஒரு 10% ஷேர் வச்சிருக்கேன் 50 lakhs. Proportionate net worth. All performing plant and machinery, depreciable assets எல்லாமே book value. Debtors stock book value. FMV1 or FMV2, whichever is higher. What is cost of acquisition? Net worth. Net worth is always book value. அங்க fair market value கிடையாது. Net worth is always book value. So நான் ஒரு land ஒரு 10 lakhsக்கு வாங்கினேன். தனியா அதை வித்தேன்னா 20 lakhsக்கு வித்தேன்னா I can do indexation and compute. கும்பலோட விக்கிறேன். land, building, factory building, plant, machinery, debtors, stock எல்லாத்தையும் சேர்த்து ஒரு 75 lakhs விக்கிறேன். இல்ல land எவ்வளவு சார்? building I have sold it for a total value. So law says okay boss. இந்த யூனிட்டோட net worth என்ன? இந்த யூனிட் இவ்வளவு நாளா நீ ரெண்ட் பண்ணிருக்க, இவ்வளவு அசெட்ஸ் இருக்கு, இவ்வளவு liabilities இருக்கு, 45 lakh net worth. You have sold for 75 lakh, 30 lakhs is your capital gain. Index பண்ண முடியுமா? முடியாது. ஏன்னா majority are non-indexable asset. Depreciable asset, non-indexed asset. Debtors, creditors, debtors, stock இதெல்லாம் அசெட்டே இல்ல. So indexation benefit கிடையாது. ஆனா ஒன்னு சொல்றேன், if the unit is in existence for more than 3 years, it is a long-term capital gain. Less than 3 years, it is a short-term capital gain. Are you clear? Okay. So land stamp value should be taken. stamp value should be taken. Building, immovable property, stamp value should be taken. Plant and machinery, only book value should be taken, but claimed in, income tax book value, claimed under 35 AD, so you cannot take anything. Because as per income tax law, value is nil. As per income tax law, the value is nil, not book value in the books of accounts, but under income tax law. Other plant and machinery, quoted investment, jewelry, debtors, only the value as per books will be taken. Inventory, advance tax. இதை நீங்க இன்னொரு கம்பெனிக்கு டிரான்ஸ்ஃபர் பண்ண முடியும்னு யாராவது நினைக்கிறீங்களா? I have paid advance tax. Can I transfer it? Not at all an asset. Similarly, provision for taxation, not at all a liability that can be. It is your tax. You have to pay. So, advance tax is not at all an asset, and external liabilities 30-40. The consideration for slum sales is allotment of 1 lakh equity shares whose current market value is 100. That's only will stand. And monetary consideration of 50 lakhs. Okay, let's start. Hold on, any question? Yeah. Okay, I'll go to next sheet. We'll call this sheet as capital gain sheet. I am first doing the work computation of FMV1. What is FMV1 for? Fair market value of outgoing assets. Okay. And net worth. Land, okay, stamp value for FMV1. Okay, land 45 lakhs, building, again stamp value, net worth-க்கு எடுத்துக்கும் போது book value, book as per IT law. Maybe in my books I will claim 15% depreciation, 20, but income tax law we know 10% is the only the rate of depreciation. So when I say book value, please consider only whatever is as per IT law. Are you understanding this? Are you clear? Okay. Net worth what? புரியல. Oh, sorry. Yeah. I'll change. நான் அதை ரவுண்ட் பண்ணதுனால நான் 5 லேக்னு போட்டுட்டேன். Am I clear? So depending upon 400 crores or other things, it is taxable at, this is LTC, 20%. 20, okay. Tax at the rate of 20% under 112. As of now, I am assuming there is no surcharge. As of now, I am assuming there is no surcharge.
sometimes non-sale might be beneficial because selling it individually might attract higher tax costs.
No, anyhow, capital gains is 20%. No. Yeah. If it is short term, then also probability of selling it individual in the books of accounts also. But generally, it is better to have slump sales if you are selling the units. Okay, friends, let me do an assessment of individual along with ULIP. I'll tell you about ULIP and its taxation in a brief manner. The amendment came on and from 1st April 21. So any ULIP up to 31/3/21, never even worry, it is going to be exempt. The proceeds are going to be exempt, but one condition is that 20 or 10%, as the case may be, will be a condition. That is, it should not exceed 20% of the sum assured where it is taken on or before 1/4/2012 and 10% of the sum assured after 1/4/2012. That is the only thing. But came the amendment, high net worth clients are going to be taxable if the total premium paid on all the policy, even though it is less than 10%, but if the total exceeds 2,50,000, then the maturity proceeds are going to be taxable under capital gains. What is taxable? The bonus that you are getting. That is maturity proceeds minus premium paid. That income is going to be taxable. This is the fundamental scheme. அதுலயும் ஒரு பெனிஃபிட் கொடுத்தாங்க. Up to 250 எந்த பாலிசில இருக்கோ அது anyhow not taxable. Anything other than that will become taxable. Okay. In a brief manner, let's look into and keep progressing because இப்பெல்லாம் அதோட மெச்சூரிட்டியே வராது. இன்னொரு 5-6 வருஷம் ஆகும் the question to become dynamic. Maybe a theoretical question might come. Mr. Aditya has a gross salary income of 9 lakhs after claiming HRA and standard deduction. So it should be net salary income. Okay. It should be net salary income. Okay. He has paid a medical insurance for himself and spouse 14,000 and dependent parents who are senior citizen. His parents are non-resident for the relevant year. The beauty is only for resident senior citizen the 50,000. Illati 25,000 da. Illati only 25,000, not the extra. Aditya received 3 lakhs from his employer towards medical reimbursement. Out of this, 2 lakhs pertains to reimbursement on account of his COVID treatment, which is exempt. Notification number 90 says it is 90, 91, 92. 90 for salaries, 91 and 92 for IFOS. I'll talk about it in IFOS. And the balance 1 lakh is for his knee surgery, taxable. Taxable. For the said COVID treatment, he received from his friend a gift which is also exempt, that is what is 91. He has made the following ULIP during the year. Compute tax and also specify the taxation in the same in the case of maturity. 1st April 20. Sum assured 30 lakh, இது full-ஆவே exempt. மறந்துடலாம். 1st April 20 before 31/3/21 sum assured மாத்திரம் பார்த்துட்டு மறந்துடலாம். 80C claim பண்ணலாம். இந்த இதுக்கு 12 lakh annual premium 150 taxable. இங்க நான் 250 கண்டிஷன்க்கே போல நான் இன்னும் sum assured இது premium paid exceeds 10% taxable. Inga 1 lakh premium not. Inga 150. In the 3 lakhs taxable. Individually it has exceeded 250. Either rendum I can claim exemption. This too I can claim exemption. This is not taxable because it doesn't come under the purview at all. These two are exempt. The other two will become taxable. I'll give you the detailed answer. Okay. question number 7A. In the above case, if assessee has opted for 115 BAC, how your taxation standard deduction claim பண்ண முடியாது, HRA exemption claim பண்ண முடியாது, 80C 80D லாம் claim பண்ண முடியாது. Okay, let's quickly complete it. I know it's not a capital gain question. Capital gain rather than the ULIP part of it. அதுக்கு கொஞ்சம் லேட்டா வரேன். ஃபர்ஸ்ட் ஒரு ஜெனரல் கொஸ்டினா ஒர்க் பண்ணிடுறேன். Oh, no other income. Oh, okay. I'll write this. Okay. Medical reimbursement from employer for COVID treatment it is assumed that he has provided doctor certificate. Okay, treatment is within 6 months from the date of testing positive, fully exempt. Though these are qualifying restricted to 1,50,000 only. So never worry. Never worry. Okay. Never worry. It is restricted to 1,50,000. ATC you can maximum claim 150. The 120 காக தான் நான் அதை எழுதினேனே தவிர மிச்சப்படி first இதே it is more than that.
It's not
Eligible.
Exceeds 10%.
Huh?
Exceeds 10%.
Exceeds 10%, up to 10% eligible. Up to 10% eligible. For LIC long கூட exceeds 10% up to 10%. Not that fully not eligible கிடையாது. Base taxes this minus 10 lakhs into 30% plus 1,12,500. 1,12,500. 97 lakhs into 30% plus 112,500. Add surcharge at the rate of 15% because income has exceeded 1 crore but not 2 crores into 15% and HEC at 4%.
Why can't we take the margin?
One
Like
1 crore 7 lakhs Raja. போட்டு பாரு ஒரே ஒரு நிமிஷம் போட்டு பாரு. 1 crore 2,50,000 மேல போடவே போடாது. 2 lakhs தான் அதுதான் உன்னோட மார்ஜினலி. 7 lakhsலாம் சான்ஸ் இல்லை. Are you clear? Shall I move on? Shall I move on, Raja? You copy? Yeah. Can I work out the 115 and then I'll come to number in the computation. ULIP I'll come little later. I'll do 115 BAC. Okay. Under FUFU. Okay. 115. Okay. Total income under normal provision. Total income under normal provision is this. Add HRA exemption, which I cannot claim, which is 60,000 per month he has claimed, 60,000 into 12. Standard deduction, I am very sure in the but still, standard deduction, okay, 80C, that 150, 80D, that 50,000. One 187,500 up to 15 lakhs. More than that, 30%. Surcharge, HEC, all other things are the same. Okay. This in the May November 115 BAC is not going to be dynamic. எப்பயுமே ஒரு provision change ஆகுதுன்னா நம்ம இன்ஸ்டிடியூட்ல வந்து they will keep it dormant. Maximum ஏதாவது இது உண்டா 115. ஏன்னா because next year there is a major change in 115 BAC. லிமிட் 7 lakhs மாறுது, ஸ்டாண்டர்ட் டிடக்ஷன் கிளைம் பண்ணலாம், அந்த மாதிரி வருது நெக்ஸ்ட் இயர். So next year, but just that they are popularizing this provision, there can be a question where whether it is allowed or not, something like that. But otherwise 115 BAC is for May 2024. After you all become chartered accountants, you can tell your juniors, the Pachikopa Raja, நான் எப்படி படிச்சேன் தெரியுமா, சொன்னேன். May I? May I? Can we talk about ULIP now? Okay. I am going, this is, இதுதான் capital gains part இப்போ. Okay. Quick ஒரு வாட்டி provision எழுதிடலாம். Okay. ULIP. Okay. If the policy is taken on or before 31st March 2012, the only criteria is whether the premium paid does not exceed 10% of policy value, sum assured. Where it is not exceeding, maturity is exempt. Where it exceeds, maturity becomes taxable. . 2000, sorry. 20%, yeah, if it is taken before 2012, don't worry about it. அது அது இது எல்ஐசிக்கு மாத்திரம் தான், இது யூலிப்க்கு கிடையாது. அந்த 15% ஃபார் ஹேண்டிகேப்டு டிபெண்டன்ட் பர்சன், அது வந்து லைஃப் இன்சூரன்ஸ் பாலிசி தான். ஆ? 1 to 2000. Yeah. Date of budget, so 31st January 20. Date of budget 31st Jan or before. From 1 to it becomes taxable. Finance Act 21. Yeah. Okay. This is the first criteria. In this case, பார்த்தோம்னா policy 1 is going to be exempt. Okay. As regards policy 1, it was taken before 31st Jan 21 and the premium does not exceed 10% of sum assured. Whole of the maturity is exempt under 10(10)(d). For policies taken after 1st Feb 21, two criteria are essential. One, the 10% which continues, the total premium should not exceed 2,50,000. Difference between maturity process and premium paid is taxable under capital gains. Okay. Provisions of section 112A will be applicable. அப்படின்னா first 1 lakh is exempt, balance is taxable at 10%. May I? Okay, so provision. Now I will go to policy 2. Okay, here it has exceeded 10%. Okay, the premium anga policy 2 தான் அது. Yes, okay, policy, the premium has exceeded 10% of sum assured. Okay, 1,50,000 as against 1,20,000. Okay, hence maturity proceeds will be independently taxable irrespective of the year of maturity and other process. Okay, the difference between the maturity value and will be taxable in the year of maturity. Whatever you can claim 1 lakh and the remaining will become taxable. Are you clear? Policy 5. Policy 5 dana last. Okay, the premium paid as a standalone policy and aggregate has exceeded rupees 2,50,000. Hence, at the time of maturity, this will also become taxable irrespective of the other factors. Okay, okay. Policy 3 and 4. Individually, the premium is not exceeding 10%, but the aggregate premium exceeds 2,50,000. However, one benefit law provides is that whichever policy where the individual individually also both of them has not exceeded, collectively also 1 lakh plus 150, 2,50,000, collectively also it has not exceeded. So on the policy or the exemption continues. Only up to 250 உங்களுக்கு exemption உண்டு. 3 சேர்ந்து 250 exceed ஆயிட்டா ஏதா ஒரு policy taxable இருக்கும், இன்னொரு 2 policy இன்னும் still exemption can be claimed, continue to be claimed. அதுதான் lawல சொல்றாங்க that 250 definitely you can still continue to claim and 1010D will be applicable for them. Everything is only in the year of maturity. Everything is only in the year of maturity. Irrespective of the year of maturity, now ஒரு வருஷம் ஒரு பாலிசி மெச்சூர் ஆகுது, அடுத்த வருஷம் இன்னொரு பாலிசி மெச்சூர் ஆகுதுன்னா இந்த டிஃபரன்ஸை பார்ப்பாங்க. ஃபர்ஸ்ட் இயர் 2 lakhs தான் வச்சுக்கோங்க ஒரு எக்ஸாம்பிளுக்கு, இன்னொரு 50,000 வரைக்கும் எக்ஸம்ஷன் கிளைம் பண்ணலாம், அதுக்கு மேல இருக்கிறது மாத்திரம் டாக்ஸபிள். இங்க அப்படி கிடையாது. பாலிசி 1 எனிவே எனி டைம் இட் மெச்சூர்ஸ். அதுக்கு முன்னாடி ஏதாவது மெச்சூர் ஆயிருக்கலாம், அதுக்கப்புறம் ஏதாவது மெச்சூர். இது ஸ்டாண்ட் அலோனா டாக்ஸ்.
Since it's in the same year and the aggregate premium paid is 2 lakh.
Policy 2, 3, 4, 5.
Like in a financial year or
Policy 2 and 3 aggregate does not exceed 250. Aggregate does not exceed 250. But unfortunately, policy 2, this exceeds 10%. So policy 2 is not coming under the second criteria. First criteria itself, it becomes taxable. Am I clear to you? Okay, right. Let's stop here today. Okay, I know I'm stopping with the 7th question. Okay, the 3 pending questions we will carry forward it. And tomorrow my agenda is completing capital gains, completing assessment again from individuals, some firm related assessments. Okay, cooperative society, one question I just want to work out and show you just to 115 BAD எப்படி work ஆகுதுன்னு. Okay, and நாளைக்கு முடிக்கிற வரைக்கும் திருப்பி ஒரு வாட்டி நம்ம ஆர்டிபியும் எம்டிபியும் போய் பார்க்கலாம். ஓகே, உங்களுக்கு பழைய கொஸ்டின் பேப்பர்ஸ் ஏதாவது வேணாலும் நீங்க போடலாம். I will post you 2 or 3 questions today evening so that you can try to work out. Okay, இன்னைக்கு ஈவினிங் குள்ள if possible I will upload the videos so that you can share it with your friends, or if you want to have a revisit also you can revisit. Sometimes in the classroom, due to lot of information, you might get lost. Don't worry, go back and see that video. Okay, கொஞ்சம் பேஷண்டா பாத்தீங்கன்னா, ஆனா இது எல்லாத்தையும் உங்க பிரெயின்ல எங்கயா நான் ஸ்டோர் பண்றேன். எங்கன்னு எப்படி கொஸ்டின் வந்தாலும் அந்த செல் கொஞ்சம் எவோக் ஆகி ஓகே சிட்டி மாதிரி வந்து உங்களுக்கு ஆன்சர் பண்ணி கொடுத்துருன்னு சிவனை வேண்டிக்கிறேன். மீட் யூ டுமாரோ மார்னிங். ஆல் தி பெஸ்ட்.